profits, and so this can go on for longer than we all imagine.
Dan, when you look at some of these tech companies, though, a lot of the CEOs have been doing these quote-unquote check-in calls with the former president. It feels like they're trying to hedge their bets regardless of who wins, except for one, Tesla. They are out there in the open. Elon Musk, he is playing this really outsized role when it comes to U.S. politics right now. Can that hurt Tesla and demand for EVs in the United States?
Yeah, I don't really think so, because here's the thing you have to think about. When the U.S. had its first EV summit, what was the company that wasn't invited?
Elon Musk.
That was Tesla. That was Tesla. And so you go, does that make any sense in any world to not have Tesla show up to an EV summit? So to some degree, if the current administration stays in charge, he's going to be in the same boat that he was before. So you got to believe that every CEO of every major tech company has a favorite, whether it's Trump or Harris, but they're all hedging their bets with the exception of one. Whether you like him or not, you got to give him credit for at least being out there and talking about it. But Dan, at the end of the day, I don't think the election and whoever wins or whoever he's going to support is going to affect the demand for cars, because think about this. They already had results.
But I guess my point is, will he turn off maybe Democratic voters that were interested in buying a Tesla?
Well, my point is that he was already campaigning for Trump, and they had a great outlook for this upcoming quarter. The stock was up 20% or so after that. So you've already seen whatever impact that was going to have, and I don't think it's going to really matter going forward. It's going to come down to competition from China, what the EV tax credits are like. Do they get out a cheaper model? And what about full self-driving, autonomous robots, and robo-taxis? I think that's going to be the major thing that impacts Tesla in the future. And quite honestly, on the negative side, it's got an extremely high multiple. So if there are any hiccups on some of those new programs at over 100 PE, that's going to be a big deal. So that's really what I'm focused on.
There's a larger question here, which is how accurate are the Trump trades? How much are those the areas that really are going to benefit under a potential Trump administration? How accurate are the Harris trades? Are there any trades that people are sort of categorizing as in one camp or the other that you think are wrong or overstated?
Well, the problem is, at least from my perspective, the race is too close to call. And so I think, as I said earlier, you're going to end up with some volatility regardless of what happens on Tuesday. And hopefully we know who's president on Tuesday. And then I think it goes back to business as usual. We're going to stop talking about the race for president. We're going to start focusing on how good is consumer demand into the holiday season. What does inflation look like? Don't forget the Fed has a decision on Thursday. I think everybody pretty much expects 25 basis points. But what do they talk about in terms of the future? How aggressive are they going to be? And so for a few days, obviously, this is going to be in the news cycle. And then we're going to have some certainty. I honestly think the market rallies between now and year end. Do we get potentially a pullback over the next few days because of whatever happens? Yeah, that's very possible. But also, don't forget, a lot of people are de-risked going into this event. Nobody wants to get blown up on the other side of this. And so it wouldn't surprise me either if you see a rally because everybody goes, oh, thank God, now I know who's going to be president. And I can go back to figuring out, is Amazon going to have a good retail season with the consumer? What's going to happen with Google antitrust? Because don't forget, there's a decision coming out on that. And so you're going to go back to these sort of fundamental issues that are going to drive these stock prices.
A lot of people looking forward to that, Dan. Dan, it's good to hear from you, sir. Let's do it again soon. Dan Now's there of Now's Investment Management. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Here's Danny Berger. Hey, Danny.
Hey, John. Israeli Prime Minister Benjamin Netanyahu's office is accused of leaking classified documents that help justify tough demands in the ceasefire negotiations with Hamas. 4 suspects, including a Netanyahu spokesperson, have been arrested. Opposition leaders and security experts say the leak compromised national security in the war effort, while Netanyahu calls it a witch hunt. Berkshire Hathaway's cash pile reached a record $325 billion in the third quarter. It's the latest result showing that the company cut its stake in Apple once again, boosting that cash hoard. Berkshire reported operating earnings that fell 6% from a year earlier as insurance underwriting earnings slumped. Venom 3 took the top spot at the weekend box office for the second week in a row. The superhero film brought in an estimated three-day total of $26.1 million. The Wild Robot and Smile 2 followed in second and third place. The film here, which reunites Tom Hanks and Robin Wright after years, 30 years to be specific, after Forrest Gump, that was snubbed by moviegoers, opening to only $5 million. And that's your brief, John.
Danny, thank you. Have not been to the movies for months. Months and months.
Venom 3 or Smile 2 didn't really
Tom Hardy
get
and
you?
Venom's not going to make it happen.
Laughing for?
Nope.
Okay, well, let's check.
Gladiator might make it happen.
I know.
Right?
You are big on Gladiator.
A few weeks away, right?
I love that all of the
Denzel.
hit movies.
I haven't been since post-pandemic.
All of the hit movies really are repeats, or sort of like reimaginations.
Did you hear that?
She hasn't been since the pandemic. Well, I don't know where you've been.
You haven't been since the pandemic?
No, no one's invited me.
Okay. Someone can make that happen for you. Up next on the program, clearing the path for another rate cut.
The data are consistent with an economy that's still robust.
Like, let's say somebody is an, Uber or Lyft driver today, where they can actually sort of manage a fleet of cars, and sort of manage, I don't know, 10, 20 cars, and just sort of, take care of them like a shepherd tends their flock. You have a little flock of cars, and you're the shepherd, and you take care of your flock of cars. I think that'd be pretty cool. I think it's going to be a glorious future. It's going to be really something special. So, yes, good, all excellent questions. We do expect actually to start fully autonomous, unsupervised FSD in Texas and California next year. And that's with the Model 3 and Model Y. And then we expect to be in production with the Cybercab, which is really highly optimized for autonomous transport in probably, well, I tend to be a little optimistic with timeframes, but in 2026. So, yeah, before 2027, let me put it that way. We'll make this vehicle in very high volume, but well before that, you will experience a robotic taxi via the Model 3 and Model Y program, and Model S and X too. But your 3 and Y will achieve unsupervised full self-driving with permission in wherever regulators essentially approve it in the U.S. and then to follow in outside the U.S. So, and it's Cybertruck too. Yes, of course. Sorry, I don't want to forget. Yes. All our cars are basically all cars that we make. So.
I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Look at the next couple of years, rates on cash are coming down. Now is the time to make sure that you have a bond portfolio because you will get higher returns there over time.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
Another rate cut.
The data are consistent with an economy that's still robust, an inflation rate that is proving somewhat more sticky than you would like, and a major call for the Fed to exit this notion of fine-tuning and go into a world where it has a steady steer on interest rates. It should be cutting by 25 basis points for the next few meetings.
So here's the latest. Payrolls advancing at the slowest pace since 2020, clearing a path for the Fed to continue cutting interest rates. Lindsay Piegser of Stifel writing, while an adjustment in conditions does warrant less firm policy, as well as a further reduction in rates, another outsized 50 basis point move is clearly unnecessary, with the base case returning to smaller 25 basis point cuts from here. Lindsay joins us now for more. Lindsay, welcome back. Before we get into policy, let's start with data. How noisy was that number on Friday?
Well, it was pretty noisy, and most of the weakness can be largely acknowledged as hurricane-related weakness. And the Fed is all aware of the noise that typically follows into the data reports for several months after such weather-related disaster. And so I do think that, yes, there was a lot of noise. We have to compare it with the resilience that we've seen in the labor market for several months leading into this, not to mention the September employment report at a multi-month high. And remember, even with that top line number coming in well under expectations, we saw wages tick higher. We saw the unemployment rate remain steady. So it's pretty clear that the weakness in the report was more of a one-off, again, hurricane-related weakness.
Lindsay, we were speaking with Eddie Ardenia earlier from Ardenia Research, and he was saying that he sees real signs of bond vigilantes coming back and thinks that the increase that we've seen in longer-term yields, and frankly yields across the curve, is an indication that it was an error, or it was sort of premature for the Federal Reserve to cut by 50 basis points. Would you agree?
Well, I do think the move was somewhat excessive, particularly given the contrast of what we saw in terms of the Fed's assessment of the economy. At the same time, they opted to make that larger 50 basis point cut. They told the market that they characterized the economy as solid. They said the labor market was in solid condition with the unemployment rate still low. And while inflation had been making improvement, they said there was still further ground to cover. So there was somewhat of a hawkish tone in the statement accompanying that outsized dovish move. And when we look at the data, I think the Fed's assessment was more on target. The economy does appear to be very resilient. We see this ongoing resilience in the consumer. And we do see, again, that sticky nature of inflation, which suggests that that 50 basis point move might have been excessive in nature.
Whatever happened to the long and variable lags, Lindsay? We've been talking about how steady the labor market is and how the economy is set to grow, albeit at a relatively modest pace. Are we just saying that that was wrong and that there were no long and variable lags and that the lags just, aren't really showing up?
Well, remember, the long and variable lags are typically associated with monetary policy that's increasing in firmness. It takes a longer period of time for rate hikes to filter into the economy as opposed to rate cuts. Those tend to filter out into the real data at a much quicker pace. So we have to be careful when we're talking about which side of the cycle we're on. Now that the Fed has taken this policy pivot and expectedly continues with rate cuts, that easier money policy is likely to filter into the economy at a much more rapid pace than what we saw in rate hikes on the way up.
If that's the concern, then do you expect a skip either this week or in December?
Well, I think given the 50 basis point decision in September, bypassing November would essentially be an admission by the committee that that was an excessive move, that they didn't need to make that large of an outsized cut. And so we do expect the Fed to continue in November, albeit at a smaller pace with a 25 basis point cut. But should we continue to see indications of strength in the economy, resilience in the consumer, a sticky nature in inflation, I think the Fed would look to December for a potential pause in policy adjustments.
When you look at the resilience in the economy, I know it's a one-off when you look at the 12,000 jobs added on Friday. But if there wasn't a hurricane impact and if there wasn't a Boeing impact, what would the jobs number be?
Well, I think if we look at the underlying trend in job creation, we see that we were on a very steady path of adding roughly 200,000 jobs on a monthly basis. So again, smoothing out some of that month-to-month volatility, I think that was the general pathway that we would expect for the labor market, excluding some of that weather-related disruptions. And remember, the unemployment rate has been very solid at this 4-ish% pace for quite some time, with wages sticky at about 4%. And so if we exclude the hurricane's impact, I would have expected the employment report to look closer to that solid expansion that we've been seeing.
Big downside surprise on Friday. Lindsay, thank you. Lindsay Piegza there of Stifel. Just got a note from Kit Jukes of SocGen. A clean sweep and a Harris win without a clean sweep remains the two most likely outcomes in our view. So a Trump clean sweep and a Harris win without a clean sweep remains the two most likely outcomes in our view, and equally likely. And then it gets even harder for markets. These are the most bullish and most bearish outcomes for the dollar, respectively. What do you do with that? That's the challenge that everyone's got into tomorrow.
And this is the reason why we're seeing such incredible volatility in some of these pairs, in particular the dollar Mexican peso, because there isn't an edge, and we keep talking about that. With respect to those two outcomes, there is a feeling the Senate will go red. And there is a feeling that a red sweep is more likely than a blue sweep, and that has been baked into markets, albeit has been coming in pretty significantly over the past week. But now going forward, the question really is, where did the polls get it wrong? We don't know.
Well, when it comes to the Senate, you're exactly right. The conviction call is that it is going to be red because Democrats have more seats they are defending than playing offense at. But the question for the Senate now is, how big is the margin? Is it 51? Is it 54? We don't know.
Very tight margins, that's for sure, at the moment at least. Coming up on the programme, in the third hour of Bloomberg Surveillance, we'll catch up with Mike Wilson of Morgan Stanley, the Ryanair CEO, Michael O'Leary, Stephanie Roth of Wolfe Research, and Sarah Malik of Nuveen from New York. This is Bloomberg.
How can you have dinner with friends without hinting what you're thinking about? And do you ever get suggestions from your friends at dinner, this is what you should do? And how do you respond when they kind of say, maybe you should lower interest rates? You just keep eating, or what?
You might define the word friend to mean doesn't ask you about interest rates. So, no, people don't do that generally. You know, people I don't know will always say, hey, cut rates. Somebody said that in the elevator this morning.
Did that influence you, or no?
I said, thank you, sir. You know, and no, but I mean, you know, people say things, but you know, it's fine.
So in some parts of the society these days, people are making decisions based on something called artificial intelligence, AI. Have you thought about, you know, calling up ChatGPT and saying, you know, here's all the data we have. What do you think about would be a good idea? Have you ever thought about that, or they're not going to like you to do that?
We haven't done that. I mean, we have done little things, like we've asked ChatGPT to generate questions for the press conference. And I'm happy to report for any journalists who are here that the questions were not as good as the ones we get from real journalists. So,
what about my questions? How do they compare to my questions? Okay.
No comment.
Right, so they weren't that great. Okay.
Names that move markets are on Bloomberg.
At the moment, we are not totally unhappy with what we see. It looks very much that inflation is on the right track of disinflation. You know, we come from very high numbers, as high on average for the whole of the euro area as 10.6%. And the latest reading we had for the inflation in September was 1.7.
Nobody covers business like Bloomberg.
We should talk about how we really can imagine how we use this technology. You know, I talk to doctors, I talk to, you know, biochemists, I talk to teachers, I talk to artists, I talk to, you know, farmers. There's so many ways we can imagine using this. There's so many ways we can use this to make people's life better, work better. I don't think we talk enough. We are talking about gloom and doom, and it's also just a few people talking about gloom and doom, and then, you know, the media is amplifying that. I don't know what you're talking about. Yeah, I don't think we give enough voices to people who are actually out there in the most imaginary way, creative way of trying to bring good to the world using AI.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
Shorting a stock purely because you think it's expensive is a death wish.
These are companies that are growing their market.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Weekdays at 9 a.m. Eastern, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
It all comes down to the election. The race in various battleground states are quite tight.
This is effectively a tight race. It's going to be tight all the way through the wire.
All the T's are crossed and the I's are dotted, and we will have an outcome on Wednesday.
We think we get a very clear result in the first 48 hours post-election.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
90 minutes away from the opening bell, let's get you some scores. Equity futures on the S&P 500 firmer by 0.1%. No drama in the equity market. Some drama in the bond market, though. If we switch up the board and get to what's happening in fixed income, yields down on the 10-year maturity. We're down by 9 basis points, down by about 10 through most of this morning. You'll notice a much stronger Mexican peso, a much weaker US dollar. You'll notice that Asian equities have done nicely as well as we start to unwind or rebalance some of these Trump trades coming into a brand new trading week.
Basically, all people know about what could potentially be policy is that there's either more debt or even more debt. And the question is, how much do yields go up to even more debt, which is the Committee for the Responsible Budgets assessment and a lot of other CBOs as well of Trump's budget being more in terms of a deficit versus Harris's. Still, it's a relative game. So you have to wonder, how much are we stripping in or stripping out some sort of political overlay, and how much is this just the fundamental economy, which is with a neutral rate that is much higher than it's been in the past?
Or the bond market paying more attention to Burlington, paying more attention to what's going on in Iowa. And this report over the weekend, this poll from J.N. Seltzer, talking about that Kamala Harris is up 4 points. In September, she had Trump up 4 points. And then in in June, it showed Trump with an 18-point lead. That's when it was Biden. So now you have everyone starting to think about maybe the polling, even though it shows it's neck and neck, maybe there's something they're missing and they're underestimating.
That polling has made some Trump trades nervous over the weekend and into Monday morning. I mentioned a note from Kit Juice over at SocGen just moments ago. I want to share it with you again. A Trump clean sweep and a Harris win without a clean sweep remains the two most likely outcomes, and in their view, equally likely. These are the most bullish and most bearish outcomes for the dollar, respectively. That's how hard it is in foreign exchange.
Which is the reason why everyone's going to be up all night and trying to figure out what the tea leaves are. I question the logic of that, of whether these are actually the clean trades, if those outcomes are the likely outcomes. People have been modeling, including Mike Wilson over at Morgan Stanley, what 2016 looked like, what 2020 looked like. I looked at a whole host of performances that someone else put out. The answer is we have no idea, because it's the setup that goes in, and it really comes to how big the surprise is on the back end, and I think that that's what a lot of people are looking at.
You can question Kit directly tomorrow morning, 6:45 Eastern Time, when he joins this program. You can question Mike as well. Coming up on the program, Mike Wilson of Morgan Stanley as investors pare back some Trump trades. Ryanair CEO Michael O'Leary as the airline cuts its growth target following Boeing delays, and Stephanie Roth of Wolf Research on why Trump's tariff policy is one of the most underappreciated risks. We'll return to that a little bit later. We begin this hour with the equity rally stalling, going into a defining week for financial markets worldwide, with some traders beginning to unwind Trump trades as the latest New York Times Siena poll shows Vice President Kamala Harris ahead in 5 of 7 key swing states, and one poll giving Harris the edge in Iowa, a state Trump won with ease in 2016 and in 2020. Mike Wilson of Morgan Stanley joins us now for more. Mike, it's good to see you.
Great, thanks for having me.
Let's get into this. The parallels between now and 2016, how strong are they?
They're not strong at all, because, I mean, like, at the end of the day, the business cycle and earnings and also interest rates will determine kind of where stocks trade over the next year or two. And in 2016, as you recall, we went into that election with a lot of slack in the economy, right? Things were slow. We had a manufacturing recession around the world in 15, 16. The Fed was, rates were pretty low. Generally, the economy, we had a lot of slack from a labor standpoint. So it could receive kind of a pro-reflationary policy strategy. Today, we don't have that slack. So prices are extremely high. Consumers and small businesses are much more, I would say, sensitive to higher interest rates. So rising interest rates and kind of a pro-cyclical strategy not going to be good for those types of stocks. And I think also the bond market now is in a much different position, right? We have way more debt, as you mentioned earlier. In 2016, we had plenty of slack in the borrowing markets. Today, we don't have that.
Here's what doesn't make sense to me then about the Trump trade. If you get bond yields that climb, how can risk assets keep rallying?
Well, I think it depends on why they're rallying, okay? So I do think that equity markets are still nervous about growth concerns. I mean, the labor market's all over the place. I mean, people can make excuses for why it's better or worse month to month, but the general trend in labor is down. We're in a late cycle economy. So the equity market is worried about growth slowing, and that's why the Fed's cutting interest rates, okay? So the bond market can't, I mean, the market goes up because growth is better, and people believe that, then it could be okay for equities. If bond market yields go up because term premium is widening, because of fiscal sustainability issues, then it's a problem.
Well, I guess the reason why I ask this is because the Trump trade the knee-jerk reaction supposedly is bond yields go up and equities rip, particularly in the more cyclical sectors. I'm thinking of financials. Based on the idea that you're not necessarily getting some sort of economic impulse that's immediately overlaid onto this scenario, why should risk assets continue to rally if yields continue to surge simply on this idea that the deficit's increasing and that bond vigilantes suddenly could be back?
Well, I mean, first of all, the financials is a little bit different because that's a dereg sort of call, and I do think that one's fairly visible. I think if you have a Trump presidency and maybe even a red sweep, you could get more lenient regulatory environment, maybe M&A picks up. That's kind of the financials trade, but that's unique. And we don't think the financials have really rallied that much on that trade yet. It's been more about the third quarter earnings season and the fact that we went into that earnings season with not a lot of high expectations. So I think there's scope for further follow through in certain quote unquote Trump trades. At the same time, there's probably, the other side, which is I think a lot of the negative trades have played out for the Trump trades. I mean, bonds have sold off probably too much, and the renewables and things like consumer goods companies that will be hurt by tariffs have really been hammered. So if Harris wins, you could see a pretty big rebound in some markets. So there's a lot of permutations here. It's not as clear cut. I think you said it exactly right. It's all about the setup. Okay, stocks and asset prices move based on positioning as much as they do about the actual news. I'm looking for a clearing event. Okay, I'm hoping this is a clearing event, and then we can kind of get back to doing what we get paid to do, which is analyze interest rates, earnings growth, and kind of multiples, trying to figure out, okay, what's the fundamental case here? And my guess is that could take maybe a month to kind of clear.
When it comes to a clearing event, would you agree with Kit Jukes that it's either likely going to be a Republican sweep or Harris with gridlock, aka Republican Senate?
Yeah, I think that's probably. I mean, that's what the prediction markets say. I mean, who am I to argue with that? But it's not like it's a slam dunk. Okay, I do not agree with the view that a Republican sweep is the best outcome for equities. I think it's probably Trump with a divided Congress.
But a Republican sweep means a 15% corporate tax rate, potentially.
Potentially. I mean, let's see if they can actually get that through. I mean, the bond vigilantes may come for them if they try to cut taxes in that sort of form or fashion. And they're not even talking about. They're talking about at the margin trying to reduce some taxes, maybe extending some certain things. I think the bond margins.
The whole election has been a tax cut election.
Yeah, but I mean, I don't think that's priced. Just like in 2016. Remember, in 2016, nobody priced that bond cut until December of 17 when the Senate actually passed it. I mean, the whole year is like, this never going to happen. It's never going to happen. I think the markets they always wait for the actual evidence to actually trade those types of events, particularly when it comes to Congress.
You said the most beneficial, Trump with divided government.
Yeah.
Can you explain that just a little bit more?
Well, I mean, the market's like uncertain. They don't want one party in power. I do think that a Trump, we said this all along, Trump presidency is probably more pro-growth, okay? Maybe not as good for bonds. Harris would be probably a little less growth, but probably better for bonds. And that's been our general view even prior to the last couple of weeks as things have kind of traded through. Now, at the margin, is it going to be dramatically better? I mean, I don't know. The markets have already priced a lot, right? You know what I'm saying? Like, that's the problem. We've already priced a lot of good news. And let's take a step back, too. We're trading almost 22 times earnings, okay? In 2016, we were trading 16.5 times earnings. So you got 5.5 multiple points of, we got to justify that no matter who wins this election. So we're just in a totally different setup going into this election.
So Ed Yardeni of Yardeni Research was on the program earlier this morning and essentially said to us, choppy road to nowhere, flat market into year end. Do you share that view?
Well, choppy meaning there could still be some big swings. I mean, maybe we end up flat from here to there, but there's going to be some big trading opportunities between here and there. I think we could see 6,000 potentially, you know, in some sort of a clearing event that isn't, you know, there's not a lot of consternation. People feel good about things. But then I think it's really hard for us to get past 6,000, 6,100 in any scenario, because then you're so stretched on valuation, and I don't see growth accelerating in a kind of way which would justify even higher multiples for 2025.
Can you explain what this clearing event for a month looks like?
No, I can't.
Okay, all right. Well, can you give us a sense of what that could mean? I mean, is it basically just whipsawing every single day, or is it basically that you see one trade in particular that you could see really getting blown up during that period of time?
Well, I could see many trades getting blown up, not just because of the election, but because, once again, we're very stretched. We're into the FOMO season, right? People need to perform the next 2 months. There's a lot of things going on here. And so I could see a blow-off move of some kind, post-election, a clearing event, but then reality sets in that we're going to have some kind of fiscal consolidation next year, no matter who wins. And in my view, I think that has to happen. And that, you know, that's going to create uncertainty again. And then positioning gets kind of whipped around. The other thing that's going on is the Mag 7, which reported last week, was a mixed bag. What I was, you know, we've been more pro-cyclical. What I was worried about last week was that they would come in with such great results that it would suck all the oxygen out of the markets again. So that didn't happen. But if we were to get a new theme, for example, let's say a new theme pops up, I can guarantee you this: the money's going to flock to that theme very quickly, because that's what we need right now. We need something to get excited about, and we're kind of lacking in that. We're kind of lacking in that. But something will happen, right? In other words, the market will find a new shiny toy, and it will move to that shiny toy.
Right now, the Fed is not the shiny toy. We have barely mentioned the Fed's meeting on Thursday. How much does that matter to this entire equation?
Isn't it Wednesday? Or is it, you said it's Thursday?
It's Thursday.
It's Thursday. Moved it back.
Yeah.
I know.
Okay.
It's very unusual.
Yeah, but I mean, but Wednesday, they're meeting on Wednesday.
Yeah, they're meeting on
yeah,
Wednesday,
fine,
but we have the decision on
They're still
Thursday.
meeting. They're going to know what happened, or think they're. Anyways, yes. What do I think? I mean, they don't have any crystal ball. I don't think the election is going to change their decision making. So right now, it's 25 basis points.
Did they change yours?
No. I mean, at the end of the day, the Fed's is somewhat on autopilot, assuming the economy doesn't take a really bad turn, and they got to cut even more rapidly. I think the trick for the equity markets is going to be what's their tone, the dovish tone or hawkish tone. Is it a hawkish cut or is it a dovish cut? But that's 1 or 2%. That's not a 10% move on the Fed. The Fed is kind of over here now. They're doing their thing. They made their decision. That was September. That was a shiny toy in September.
Right.
But now we've kind of got off of that. And now it's about earnings. And then as we go into year end, it's going to be how does 2025 settle in for the economy, for earnings growth, and where should multiples be based on how the equity markets are interpreting the move in bond yields.
Looking forward to having that conversation with you, Mike. It's good to see you, sir. Thank you. Mike Wilson there of Morgan Stanley with an update on stories elsewhere this morning. With some shiny toys, it's Danny Berger. Hey, Danny.
Hey, John. Franchise Group, the owner of brands including The Vitamin Shoppe, has filed for bankruptcy protection. Its backer, B. Riley Financial, had months of losses and turmoil. Bloomberg News learned that FRG listed assets and liabilities between $1 and $10 billion. The company has been entangled in issues surrounding a $2.8 billion buyout from B. Riley that went awry after FRG's founder faced a criminal fraud investigation. Security fencing was added around key locations in Washington, D.C. yesterday. The Washington Post reported that the Secret Service erected new 8-foot metal fencing around the White House, U.S. Capitol, and Vice President Kamala Harris's residence. District authorities are preparing for potential unrest following tomorrow's election. At a news conference, Washington's police chief said that he knew of no credible threats, adding that there is no need for any alarm. And maybe this is the shiny new toy. Saturday Night Live scored a big guest appearance during the open of last weekend's show. Vice President Kamala Harris surprised audiences by appearing alongside her doppelganger, Maya Rudolph. The sketch drew comparisons to a similar skit featuring Donald Trump on The Tonight Show back in 2015. The appearance, though, was called out by the chair of the FCC, who said that featuring Harris violated the agency's equal time rule. The network reportedly aired a 90-second clip of Trump on Sunday in response. And that's your brief. John.
Danny, thanks for the update. More from Danny in about 30 minutes' time. Up next, the Morning Calls Plus. Ryanair CEO Michael O'Leary as the company cuts its passenger growth target for next year. That's just around the corner. From New York, this is Bloomberg.
covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
In case you missed it, on Bloomberg Technology.
We're excited to really change the expectations for space companies, where you have this always-on, reliable, and frankly dynamic satellite connectivity that you would expect of your power grid.
Easier access to space means more demand for space, and that's the definition of an exponential growth function.
I think that's what's so exciting from a business perspective. If you can do it, you're one of a few numbers of organizations in the history who've actually pulled it off.
Don't miss Bloomberg Technology live every weekday.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure. Don't miss Bloomberg's interview with the
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
It doesn't make a lot of difference to us one way or another because we're gone into the winter now anyway. The big issue for me was how's the certification?
I'm Joe, visiting from San Francisco. How do you think about the role of technological advances, especially generative AI, on more traditional industries? Thank you.
Yeah, I don't know anything about AI. That doesn't mean I deny its existence or importance or anything of the sort. And last year I said, that we let a genie out of the bottle when we developed nuclear weapons, and that genie has been doing some terrible things lately, and the power of that genie is what scares the hell out of me. And on the other hand, I don't know any way to get the genie back in the bottle, and AI is somewhat similar. It's part way out of the bottle, and it's enormously important, and it's going to be done by somebody. So we may wish we'd never seen that genie. It may do wonderful things, and I'm certainly not the person that can evaluate that. And I probably wouldn't have been the person that could have evaluated it during. I had one experience that does make me a little nervous, and I'll just explain it. That very recently, fairly recently, I saw an image in front of my eyes on the screen, and it was me, and it was my voice, and wearing the kind of clothes I wear, and my wife or my daughter wouldn't have been able to detect any difference, and it was delivering a message that no came from me. So when you think of the potential for scamming people, if you can reproduce images that I can't even tell, that say I need money, it's your daughter, I've just had a car crash, I need $50,000 wired. I mean, scamming has always been part of the American scene.
You're depending on Boeing to come up with some planes. You're reading the news about the strike. You're talking to executives, finding out the blow-by-blow about...
My general advice is continue to seek out companies or people that are maybe 1 stage or 2 stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down that path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
When I was younger, I used to be in bands. I played drums in bands and toured America with them. Did a lot of session drumming, recorded albums. So yeah, it was good fun doing the drumming. The only reason I stopped it, well, I still play, but not as serious as I did when I was younger. But drumming doesn't pay the bills. I was never good enough to be able to pay the bills with it, but it was good fun. I started RJF, and the reason I started it was I saw a gap in the market for particular early stage and startup businesses. With the experience that I've got of running businesses, of being a finance director at the very biggest companies in the world to being finance director of small startups, we were looking at providing more than just basic accountancy services. So yes, we'll do all that. We'll do all the basic, all the statutory side of things that you need to do. But there's so much more value that we can add, and I wanted to have my experience to help these startups, because a lot of them don't really know where to go. You can go to your high street accountants and they can do a good job compliance-wise, but you would question whether they've actually been in the fire line of a business. Have you been in a business where you're thinking, how do I pay wages next week? Or business is really successful, what do we do with it next? Or how do we grow it? How do we grow into international territories? Or how do we grow our markets? How do we expand? So a lot of the experience I've seen over the years and seen different types of business in different sectors, I thought, well, it's a real value that I can add to these businesses as opposed to just being an FD, because a lot of these businesses can't afford an FD. But if we can take care of their statutory side of things, the compliance side of things, I'm on hand to be able to help and advise businesses with their growth strategy, or if they're in difficulty, help them through these times.
The way to, you really want to deliver growth in the UK, particularly in the regions. Tourism is the one industry you can turn on.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
It's a €10 differential, and that's transformative. If I can lower my fares to Sweden next year by €10, I will carry many more passengers to Sweden. I'll carry fewer in the UK. Airfares in the UK will rise. Regional traffic and tourism in the UK will fall. Sweden will boom. Italy will boom until Rachel Reeve works it out that this is not the way forward.
Michael O'Leary, continue the conversation if you like, if you want to stick around. It's good to see you.
Lisa, and Reid, lovely to see you all.
Thank you so much.
Come back to Europe, we need you.
The Ryanair CEO, Michael O'Leary. Coming up next on this programme, Stephanie Roth of Wolf Research and Sarah Malik of Nuveen, and maybe Michael O'Leary if he wants to continue and offer some comments on the presidential election stateside.
I'm just looking at attractions in Sweden. The ABBA Museum. We could all go to the ABBA Museum together.
We're flying to where?
Yeah, Stockholm. Love it.
Equity futures right now in the S&P positive by 0.1% from New York. This is Bloomberg.
Season is here.
Third quarter earnings season, as we've been talking about, really in high gear.
Bloomberg is first to break the numbers.
We have some big earnings after the bell. Earnings from Caesars crossing the Bloomberg terminal.
Mondelez reporting Reddit, AMD, Snap.
Let's keep the conversation going.
With the smartest insights.
The bar keeps getting higher. 20% growth rate. When your comps get tougher, how much can you beat and raise?
Continuing coverage on Bloomberg. Context changes everything.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Michael if he wanted to stick around and share his thoughts on the US election. He politely declined, and I think we're all slightly disappointed because he had things to say.
He pushed his chair back like this and said, I think that I'll pass on this one.
Until next time, equity futures on the S&P 500 right now firmer by 0.1% with 1 hour away until the cash open. With your morning movers, here's Manus Cranny. Hey, Manus.
Jonathan, very good morning. Yeah, we had a private conversation on what he really thought about the American election before he came into you. I thought we'd kick off with a little bit of a Trump top line on this. Of course, it is Trump Media, down 2.5% this morning, down 35% last week. This company's still worth $6 billion on a 3,000 times annual sales and $1 million of sales. Sorry, $1 million of sales, 3,000 times its annual sales value. But of course, as the bond market tries to understand the unwinding of what a Trump trade is, it just percolates into that vehicle. Constellation Energy, this is a conundrum, raising their guidance for the year to $8, $8.40. This is on the nuclear production. So they had a real boost from their deal that they did with Microsoft. We're up 26% from there. Then why are we down 8%? Because the Federal Energy Regulator has just blocked a deal between Amazon and Talon Nuclear. And this really readdresses the entire stage for nuclear feeding into some of the big hyperscalers and those kind of deals that we've seen being done recently. I leave you with Marriott. Again, using words like normalization. The leisure transient RevPAR is flat, but still above where the pandemic is. We're down 2%. There was slippage on the guidance. They're going to make $9.19 to $9.27, less than the market had anticipated. And the RevPAR here in the United States and Canada is just below the level estimated by the market, 2.3%. It comes in at 2.1%. Asia and Europe doing mildly better, but the core here in the US lighter than had been estimated.
Manus Cranny, appreciate it, sir. On the equity market, let's turn to bonds and take a look at things together. The 2-year, 10-year and 30-year yields declining by, call it 10 basis points on a 10-year this morning. Lisa, 428.67.
Yeah, Jumpy, responding to that poll that we saw over the weekend in Iowa, a real edge suddenly in the betting markets that Harris could potentially win. And that's really the opposite of what we had been seeing for a number of weeks. I do also want to just say, given how volatile, the fact that we're seeing benchmark bonds trade like penny stocks on any given day gives you a real sense of just how much uncertainty is baked into this market. And you add on top of that the auctions of this week, and I know I always focus on the auctions, but this week they are front-loaded and bigger than usual. $58 billion of 3-year notes today, that one's going to be fine. $42 billion of 10-year notes tomorrow, that'll be interesting. And get this, $25 billion of 30-year notes on Wednesday. When we get a result and you already have a messy market and we're talking about long-term bond yields, it should be interesting.
Great timing. Let's switch up the board and get to foreign exchange as well. Yields lower, so yield differentials playing into a stronger euro and a weaker dollar. Euro-dollar, 108.95. And then you've got the trade story around the president. See, that's playing into a stronger Mexican peso. So dollar mex down by 0.8%. A weaker dollar for a couple of different reasons across foreign exchange.
Yeah, and really it has to do with the rate story. It has to do also with the tariff story, which we're going to get more into in a bit, but that's the reason why the peso has gotten such clout. I do wonder how much this is also getting skewed because people have gotten sold baskets that are the Trump trade, baskets that are the Harris trade. And so we're all looking at these baskets and people are piling into these baskets, and it sort of is unclear exactly what the policies are going to be and how it will play out over a longer period of time.
Financial markets for the past week or so, even longer, have really been Trump trade, Trump trade, Trump trade. Jay Ann Seltzer comes out over the weekend and says, hold my beer, you might be wrong. Because I have Harris up 3 points. In September, she was down 4 points to Trump in the same exact poll. And then back in the summer, it was double digits in terms of how much Trump was winning that state. Cook Political Report has this state as solid red, but she's seeing something right now in this early voting and in this part of the electorate that maybe is foreshadowing what could happen in neighboring Wisconsin, which is part of the blue wall.
Something you might see developing through Tuesday night into Wednesday morning. Let's talk about the Trump trades. Investors walking back bets on a Trump win as the latest polls give Harris a slight national edge within the margin of error. Stephanie Roth of Wolf Research weighing Trump's economic plans, saying tariff policy is one of the most underappreciated risks of a Trump administration. Although CEOs are worried about the potential impact of tariffs, they aren't doing anything about it yet. Stephanie joins us now for more. Stephanie, welcome to the show. Just elaborate on that a little bit more, because we talk about tariffs every single day. What is underappreciated about it?
Well, a couple things. One, if you look at imports from China, you certainly haven't seen companies front-loading that, right? If you ask CEOs, they say that's one of their most concerning risks out there, but then they haven't actually been stockpiling as a result. And then if you look at some of these Trump baskets, yeah, especially the ones that are impacted by tariffs, yeah, they've moved a little bit, but not truly pricing any sort of significant tariff risk.
What do you think the economic consequences would be?
So the way we're modeling it is about a 1% hit to GDP, 1% boost to inflation. And that's in a pretty modest scenario, one where if we got China tariffs up to 60%, you would have a significant reduction in terms of imports from there, in which case that would mitigate a lot of the risk.
So what's the argument, how much credence do you give the argument that if you put tariffs into place, you actually see growth come down? Because activity really declines. We saw that with the washing machine example. When Donald Trump was president, tariffs on washing machines, and people bought fewer washing machines, and they didn't really need to upgrade. I mean, how much is that going to be what we see with tariffs also, which makes this harder to model?
So if it ends up being just a 60% tariff on China, we can kind of mitigate that to some extent. You would see a significant reduction in terms of imports from there, and we would see goods, pick up elsewhere. If it ends up being a 10% across-the-board tariff plus a 60% tariff on China, that would be a headwind on growth. So that's that kind of 1% hit to GDP type of scenario, and it could be even worse. This is a stagflationary type of policy. It's not good for economic growth.
How much pushback do you get from people saying, really, you take these seriously? You think that this actually could be policy rather than just a negotiating tactic?
Yeah, people say that all the time. Well, it won't be that bad, or, maybe it won't happen. It'll be negotiating. But we have, he did it the last time, and we have to take it seriously. Granted, the one thing to keep in mind, though, is we don't think it will happen until later 2025. So that when we're thinking about the next year and Fed policy, that's probably not going to be a real conversation for next year. This is a 2026 kind of thing. And by the way, the Fed can't really forecast these things, so they're going to have to just take the data as they come.
Right, which is a reason why people are wondering if there could be some sort of inflationary shock later on. A real question about whether it's really 10% across the board or whether there are certain areas that could get penalized more than others, with a real focus on Mexico. This is the reason why the peso has been such a focal point for traders. Do you believe that that is truly the case, that Mexico could be sort of the focal point of a lot of these tariffs, since they are the entry point of a lot of Chinese goods into the United States?
Yeah, so it's possible the 10% would look a lot less across the board than as he initially talked about, right? So we might see something like Mexico would see bear the brunt of a lot of this. And probably what happened after the tariffs got put in place on China is goods shifted elsewhere. So Mexico, and then they shifted back over to here. So I think that's totally fair. And it's probably not going to be ultimately a 10% across the board type of thing, because that would be really, really negative for growth. So we would probably see something significant on China, and then it would depend on which country, and then the tariffs would certainly impact Mexico in particular, and then perhaps a little bit on Europe too.
If you're looking at a country like Mexico, though, we had NAFTA. Donald Trump came in, ripped that up, have a new deal, USMCA. They're going to go back to the drawing board and look at some provisions in that trade deal in 2026. Given the fact that you think you might see some serious tariffs, do you think that that deal then is basically over between Mexico, the United States, and Canada, or how much harder will Donald Trump come in on that specific USMCA?
Yeah, I mean, that's certainly a tough one. And I think the Mexico one is obviously the more challenging point here. And by the way, it's interesting because a lot of clients come to us and ask if Mexico might be the beneficiary of some of this, given that you're going to see significant tariffs on China. So there's so much up in the air right now. Our base case is that you'll probably see something significant on China. Mexico perhaps could be, the next country most at risk here. But also keep in mind, Trump really does care about stock markets, right? So if we do see a significant negative impact, I think that's going to matter too.
We have seen that as well during Trump 1.0. He did come out, say something, and then quickly reverse because of how the Dow Jones Industrial Average acted. When it comes to tariffs, though, as well, the Biden administration kept some of those on from the Trump administration. How much of an impact have those tariffs had on growth?
They haven't been all that impactful. And one key reason as to why is because the goods that saw a 25% tariff on China fell by 25%. So you actually did see either whether it's companies skirting the tariffs or just moving production elsewhere. That's one reason why it actually mitigated a lot of the impact, because the goods that received the biggest tariffs did see a significant deceleration in terms of our imports of those.
We have to consider starting conditions and the labour market. Let's finish there. We'd love your opinion on what happened on Friday. You were looking for a soft print. At one point, it was the lowest in our survey, not low enough. You were about 70K?
Yeah.
Is that right? 70K. Big downside surprise on payrolls. Just how noisy was it?
Oh man, what a noisy print. So like you said, we expected a lot of noise, and it was significantly more noisy than that. I don't think we should take much from that print. I wouldn't look at the 3-month average and make any significant conclusions. We certainly saw a big impact from weather. There was a big spike in terms of people who are not at work due to weather. So kind of across the board. The message that I would take away is the labor market is fine. We're looking at a payrolls trend of somewhere around 150,000 in terms of overall numbers. And the unemployment rate did tick up We think that's probably fair, increase 9 basis points, something like 4.1%. And then it's going to depend from here on out in terms of immigration policy. That's going to be an important one. So going back to the election again, which you were kind of steering away from, but it's important to note.
All roads lead there, apparently, yeah.
All roads do. So it's important to note that in a Harris administration, we're going to be having supportive immigration policy that we might not really need because we don't really need that much more supply of labor. So she could actually be disinflationary. Trump, I would say, would be inflationary, but perhaps a little bit less so than what people fear from that perspective.
Or perhaps stagflationary based on some of your forecasts and what tariffs could mean.
Stagflationary from tariffs, less so from immigration.
Okay. Stephanie, it's good to see you. Stephanie Roth there of Wolf Research. On the labour market data on Friday, which ended up in a couple of Republican campaigns on Friday as well into the weekend.
It was instantaneous, at least on Twitter, from the Trump campaign when 12,000 was the print, and they called it, quote unquote, brutal. There's no nuance in an election cycle, especially just days out from November 5th, for them to explain that this was hurricanes and this was Boeing. They just were going to take that headline and run with it.
Of course. In some respect, it's fair game because the Democrats have been running around counting the pandemic losses, the job numbers back then, as Trump's own and things that he has to own, even though we know that it was a pandemic.
I kind of think Michael O'Leary stole the show today because he told us about Sweden. And the more that we talk about this, I'm looking at the scenic Swedish archipelago.
Oh, you're moving to Sweden?
And I'm looking at the high coast.
Is that the new Canada?
I think so.
Do you remember that?
Yes, exactly.
People were moving to Canada and they never did.
There is this feeling that people cannot wait to see the backside of this election and that, there are a lot of ways to parse it and how you're going to use it on a
Look
campaign
at tax rate in Sweden and then tell me where you want to move.
Okay.
Well said, AMH. Is this the promo for tomorrow? People just want to see the backside of this. Sarah Malik of Nuveen joins us now for more to talk about the election and what it means for financial markets. Sarah, what are you doing going into tomorrow? And I know it's super short term and super tactical, but given where this market has been, how are you thinking about the price action beyond Tuesday into Wednesday and through next week?
It's good to see you, Jonathan. Well, the stakes are high this week for 3 reasons, and that's the Fed earnings and the election. So let's start with the 2 perhaps more certain ones for the market. For the Fed, we expect 25 basis points, even with that 12,000 payrolls that we saw on Friday. Earnings have been strong. There's optimism there. Estimates did come down going into earnings seasons, but we are growing at about 4 to 5% year over year, and about 3/4 of companies are beating earnings. Now, going to the election, I think we're going to see caution with the markets, more of a defensive trade. First of all, markets don't like uncertainty. And we keep talking about which candidate will win, but we also need to talk about when will the candidate win. I think there's a reasonably high chance that we have a contested election, but we don't have an answer to who our next president is for days and perhaps weeks. In the year 2000, it took 24 trading days to decide who our president was going to be, and the markets were down about 4 to 5% during that period.
What kind of market volatility could we see if that happens this time around?
I think, first of all, the markets have been starting to pre-price in Trump winning. So we're seeing today a bit of that unwinding because of that poll that came out of Iowa. So markets have started to price this in. This is unlike 2016 where markets were surprised by his win. So we're seeing that start to unwind a little bit. And then I think the issue of who will win is going to cause the markets to just go into more of a defensive mode. We're also in a different period. Today, S&P 500 valuations are at the 3rd highest level since the year 1999. So 1999, we had a S&P 500 valuation higher than today, and in 2021 we did. And we know how both of those periods ended. So this is not a cheap market that's going into quite a bit of uncertainty over the next few days and weeks.
You mentioned the Des Moines, Iowa poll. What do you make of that and its impact on financial markets? There's been no data, just this one poll coming out of a state that many view as solid red.
Well, markets keep trying to trade off of the polls, and as you've seen, they've been very tight. And there's a lot of uncertainty around polls, which markets have learned the hard way in recent presidential cycles. So I think it's just very challenging at this point. I think what we can assume is the race will be tight. There may be disagreement over who wins the race. There could be a delay in figuring that out. That's going to bring a period of days or weeks of uncertainty. But eventually, markets are going to move on from the election, and they're going to focus on 2 things for the next president: taxes and tariffs, and what do those mean for the economies? We heard a bit about that from the prior guest who was on. So markets will eventually move back to fundamentals. So that's why, I would say, even though we're cautious going into the next few days and weeks, over the long term, we will be focusing more on earnings growth and really what's going to drive this economy going forward, which will be employment, the consumer, and inflation issues.
That's the earnings side. That's the equity side. You say back to fundamentals, and it raises this question: the new normal, is it with bonds as a ballast, or is it with bonds as a risk asset? And that's a real question, because so far in this period of uncertainty, bonds have actually been the center center of the volatility and expected volatility going forward. Is that the new normal we can expect after the election?
Well, we've seen rates back up in credit, and that's because people are looking at Fed rate cuts and assuming they're going to be less than what we'd hope for. The economy remains strong, and that's caused fixed income to struggle a little bit. But we think this is a period where areas of fixed income where fundamentals are strong, like municipal bonds, where state rainy day funds are very strong and their saving rates are high. This is where you can start to lock in yields. There is a lot of cash sitting on the sidelines, and we expect rates to go down for cash going forward. So your return's going to deteriorate. You can take incrementally a little bit more risk and start legging into bonds and locking in some yields at this point in the areas that are strong, such as municipal bonds.
You said that stocks seem expensive at a point of such uncertainty. Don't bonds seem pretty expensive too? I'm talking on the credit side, on some of the riskier side.
Well, I think it's challenging. We're not looking to take more duration at this point because of what's going on with the economy and also our forecast for, we think that the 10-year got a little bit too optimistic on the downside. And now I think it's a little bit over 4% is a little bit too negative in that sense in terms of where it can go. We see that trading in a range. So we're not taking on more duration here. We're looking for those areas with strong fundamentals. I mentioned municipal bonds, also preferred securities with the backings of banks. So you need to be selective there, but there are areas where you can leg out of cash and leg in and lock in some strong yields at this point.
Sarah, always appreciate catching up with you. Just one final word on single names. You usually offer some stocks. What are the ones you like right now, given everything you've just said?
Well, I'll be watching closely today. We're not huge. I'm not hugely bullish on it, but looking at Marriott today just to get a glimpse into the consumer and spending on travel, watching for corporate travel and how much room growth they can grow next year. I think that they're going to report before the open, and they're going to give us a good view into what's going on with the consumer and travel.
Sarah, appreciate it. It's good to see you. As always, Sarah Malik there of Nuveen. Thank you. With an update on stories elsewhere this morning with your Bloomberg Brief, here's Danny Berger. Hey, Danny.
Hey, John. Striking Boeing workers will vote today on the company's latest contract proposal, a 38% wage increase over 4 years. That's up from their prior offer of 35. It also allows union members to take a $12,000 bonus as an immediate cash payment versus splitting the funds between a $7,000 immediate payment and a $5,000 contribution to their 401k. The workers have been on strike for more than 7 weeks after voting down the prior two offers. Elon Musk is facing a setback in court. A judge ruled that former Twitter CEO Parag Agrawal and other top officers can move forward with severance claims. They're accusing the billionaire of terminating them just as he was closing the deal to take over the company in order to cut them out of severance pay. Musk has been fighting legal claims for back pay by thousands of Twitter staff members that he let go. And the Minnesota Vikings are keeping their pace with first-place Detroit Lions in the NFC North after beating the Indianapolis Colts on Sunday night. That game capped off a full slate of NFL action on Sunday. The Bills won their fourth straight game and increased their lead atop the AFC East. The Commanders beat the Giants and hold a one-game lead over Philly. And tonight, the undefeated Chiefs look to keep their streak alive against the Bucs on Monday Night Football. And that's your brief, John.
Danny, thank you. Appreciate it. Up next on the program, we'll set you up for the day ahead and we'll head over to Philadelphia, Pennsylvania in just a moment. From New York, this is Bloomberg.
If I were at the Fed, I would be thinking about the tools that we have in the toolkit differently. I would be utilizing quantitative tightening, and to a great extent, they have. Post-COVID, $12 trillion came into the global economy from central banks everywhere. And right now, we've seen about $5 trillion has been hoovered back out. That still leaves $7 trillion sloshing around in the system globally relative to where we were before COVID. Now, adjusting that for,
here. He used to have it was losing by 9 points. Now it's 5 percentage points. So it's narrowing as well. And I think that what that indicates is just how important this state is going to be for both of these candidates. Indeed, both of them are going to be here today. Donald Trump is hosting 2 rallies in this state. Not to be outdone, Kamala Harris is hosting 3. She's going to be in Pittsburgh and then Allentown and then Philadelphia, where I am at the end of the day. And it's again one of these sort of large, star-studded, celebrity-rich events that's going to attract a lot of attention here locally. You mentioned polling. There's one other that got a lot of attention. That's the Des Moines Register poll that Anne-Marie mentioned just a few minutes ago, indicating that Kamala Harris has this lead in Iowa. And I think that kind of raised a lot of eyebrows on both sides of the aisles. The Democrats were quick to capitalize that as something that kind of indicates that maybe things are going better than a lot of these other polls are indicating. For the Trump campaign, I think it was a moment for them to kind of look at their own internal polling, tout that, say that it's so far off they can't believe it. In kind of classic Trumpian discord, the person who runs that poll, J.N. Seltzer, is somebody that Trump has praised previously. So something of note, I think. But I think the real focus here is that last swing state poll from Siena College and the New York Times.
Right, because she predicted his prior wins in 2016.
Correct.
David, I want to focus on one issue in Pennsylvania. Oxford Economics said that if the issue going into the election is inflation, Trump wins Pennsylvania by 90,000 votes. If it's something else, Harris wins with an almost similar level of votes. What is the final salient issue going into tomorrow?
I think it's the economy, and I think it's just how the Harris campaign is able to reach those voters who feel, as you indicate, that maybe Trump is handling this a little bit better. But it's interesting, I've been here just fewer than 24 hours, but the level of sort of signs and advertisements focusing on the economy is certainly huge here. And, I kind of listened over the course of the weekend to what the closing arguments were from both of these candidates. And I'll start with Donald Trump. There's kind of this very streamlined message that I think his advisors wanted to tell. That is, Kamala Harris broke it, Donald Trump can fix it. And we saw him kind of meandering and wandering away from that over the course of the weekend. Kamala Harris in her presentation, yes, nodding to the economy and sort of how she wants to help middle-class voters in particular, but trying to once again welcome voters into this big tent that she has set up, while all the while nodding to the fact that she thinks that Donald Trump is not a stable or competent candidate who could be president once again. So it's interesting to see sort of how this shakes out. I'm sure you were listening over the course of the weekend, too, to the things that Donald Trump was saying. He, again, wandering very far away from what was like a very concise and streamlined message that I think his advisors rightfully think would be very salient with voters here in this state and others. We know the economy is such a marquee issue for so many people in this country, not just in Pennsylvania. I think it is going to be the thing that the state and others hinge on.
He has struggled to stay on message at times. David, good to see you. David Gura of Bloomberg in Philadelphia, Pennsylvania. 24 hours. Lisa, of closing arguments still to come.
Yeah, although I don't know how many people are actually listening to the closing arguments versus just deciding whether or not to vote. I'm not sure exactly how many people truly are undecided. The big question, the big star to me, is just how wrong are the polls? Because that, I think, is what a lot of people are looking at in such a tight election.
Who are they underestimating? You have to remember, in the midterms of 2022, Republicans were feeling real good. They were talking about massive, huge tsunami of a wave, and that didn't happen. That's because of abortion. So potentially, that is where that's their big vulnerability.
This is going to be a very long week. Tomorrow morning, here's the lineup for you. Julian Emanuel of Evercore, Sarah Hunt of Alpine Saxon Woods, Neil Dutta of Renmac, and Kelsey Barrow of JP Morgan. From New York City this morning, good morning. Thank you for choosing Bloomberg TV. What a week still to come. This was Bloomberg Surveillance.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
Assumed or aspired that that would address the total set of the issue, and it doesn't. We need to be more.
So this can carry up to 20 people, and it can also transport goods. So you can configure it for goods transport within a city or transport of up to 20 people at a time. So this is gonna, the Revolven is what's gonna solve for high density. So if you want to take a sports team somewhere, or you're looking to really get the cost of travel down to, I don't know, 5-10 cents a mile, then you can use the Revolven. Some people call it the Robovan, but so yeah. You know, one of the things that we want to do, and we've seen this with the Cybertruck, is we want to change the look of the roads. You know, the future should look like the future. So, speaking of robots, so everything we've developed for our cars, the batteries, power electronics, the advanced motors, gearboxes, the software, the AI inference computer, it all actually applies to a humanoid robot. It's the same techniques. It's just a robot with arms and legs instead of a robot with wheels. And we've made a lot of progress with Optimus. And as you can see, we started up with someone in a robot suit, sort of down, and then we've progressed dramatically year after year. So if you extrapolate this, you're really going to have something spectacular, something that anyone could own. So you could have your own personal R2-D2 C-3PO. And I think at scale, this would cost something like, I don't know, $20,000, $30,000. Probably less than a car is my prediction long term. Now, it'll take us a minute to get to the long term, but fundamentally at scale, the Optimus robot, you should be able to buy an Optimus robot for, I think, probably $20,000 to $30,000 long term. So, and what can it do? It'll basically do anything you want. So it can be a teacher, babysit your kids. It can walk your dog, mow your lawn, get the groceries, just be your friend, serve drinks. Whatever you can think of, it will do.
Bonanza really coming up this week. You take a look at the setup, pretty quiet, but then you take a look at the bond market. That's where all the eyes are, because you have a big rally underway. The 10-year Treasury yield down about 10 basis points right now. Of course, there was some shifting in the last-minute polls, maybe in support of Kamala Harris. You're seeing that reflected in the bond market, or are we, Matt Miller?
I am going to set up now the discussion that Katie and I are going to have for the remainder of the program. Sonali hasn't weighed in yet, but I hope to get her take as well. Is this move behind this move? In other words, has the change in polls over the weekend driven a widespread reevaluation of the Trump trade in the reversal of Friday's moves in treasuries and the dollar? I think not.
I have my thoughts, but I'm going to leave you hanging. We have 2 hours to get through, of course, and we all like a good argument with Matt Miller. Some movers to watch, though, under the surface, while we keep an eye on what the trade looks like throughout the day. Viking Therapeutics now up about 2.4%, rising after saying its experimental weight loss drug showed an average 8% drop in body weight in its latest study. And as Katie was talking about, NVIDIA up about 1.7% pre-market, higher after news that it will replace Intel in the Dow Jones Industrial Average. Maybe we'll talk about the Dow more on this program. For Matthew Miller, Chewy up almost 5%, 4.7% higher, as it will join the S&P 400 effective Wednesday, Matt.
All right, so a lot of cool index shifts to ignore while we focus on the election and the Fed, obviously. You know, Treasury yields on the 10-year hit 438 on Friday, a 10 basis point climb, and those were erased. We're now back to Thursday's levels, which must mean the whole market has reevaluated the Trump trade.
It's not black and white here. I'm just saying the common wisdom going on right now is that you're seeing a little bit of a recalibration. It's not a whole rethink of the Trump trade, of course. The hay is in the barn, so to speak. That's why we got up, of course, to these levels in the first place. What you're seeing today, it's hard to read too much into these moves. This is just last-minute jitters before the big event.
This is why, the numbers. You're still almost 70 basis points off the September lows for that 10-year. You're still more than 3% off the lows for the dollar. It's a little bit of a give back, but it really draws the question, if Harris does win, how much do these trades unwind? These are considered largely Trump trades.
Are we even talking about the right thing? Could it be that we are days away from a consequential Fed meeting? Of course, we've gotten a whole host of economic data. It's really easy to put things on top of what's going on when it comes to politics. We have the election tomorrow, but there's many different forces in this market.
That is true. It could be that the Fed just does exactly what the Fed wants to do, which is cut another 25 basis points, regardless of the data. City head of U.S. equity trading strategy, Stuart Kaiser, joins us now. And let's get you first to weigh in on this, you know, widespread reevaluation of the Trump trade. I mean, just because we move off of Friday's levels to Thursday, does that really mean the whole market has decided, oops, we were wrong, Trump's not going to win?
I mean, the market may have decided they were a little bit over their skis, but look, I think a lot of the moves we've seen over the last couple of weeks, whether that's financials, yields, et cetera, they've been probably 70% driven by fundamentals and maybe 30% driven by the election stuff. So, yeah, the election matters, but, you know, the fact is, I think it's the U.S. economic data and earnings that are driving those moves as much as anything else.
With that said, I still have another question about the Trump trade, because if you do see the 10-year drift higher, then at what point do you start to see that impact the equity market as well, with the market thinking that we could really be living with a higher neutral rate at the end of the day?
Yeah, I mean, I think there's two ways that happens. One is it's a highly volatile move, and we have seen some of that. We've seen a little bit of spillover of bond volatility into equity volatility. And the second would be the why. You know, I mean, largely speaking, I think most of the move we got in October was growth-driven, pushing the 10-year yield higher. If it's moving higher because of fiscal concerns and things of that nature, then, yeah, that becomes much more disruptive. So it's volatility and sort of the changing dynamic of what's driving those yields.
You can probably guess, but I'm going to stick with politics here. But I am going to talk about volatility. Of course, you have the VIX coming higher, but you think about this election in particular. This is the first election where you have zero-day options, where you have the one-day VIX in existence. How closely should we be watching those two measures, and what do you think that we can actually extrapolate from those?
I mean, you know, the zero-day stuff is real. You know, you're at all-time high levels in terms of basically options under 1 week expiration trading. So the market is trading everything very, very tactically. They don't want to pay too much of a vol premium ahead of the election, because I think there's a view that you have high skew, you have wide implied realized spreads, things of that nature. The options are expensive. People don't want to go too far out, because I think there's a view that vol premium is going to compress post-election. So, you know, luckily, you know, you have these shorter term options, and it gives people, you know, the ability to kind of be very, very tactical about this stuff. But, you know, big picture, there's a fair amount of risk premium, whether it's the VIX, implied realized, the VVIX, you know, various other kind of metrics of the price of convexity or hedging are quite high. And, you know, we would expect a lot of that stuff to compress post-election.
I was off on Friday, and the non-farm payrolls number came in way low. But it still looks like the market is not sure that the Fed's going to cut too much. We have chart 291, I believe, ready to pull up. And you can see, you know, at one point we thought we were going to get down to 3% even on the terminal rate, or possibly the neutral rate. Now it looks like the market is pricing in far fewer cuts, even after that jobs number. What do you make of the terminal rate? What's your expectation for it?
Look, I mean, we could debate where the terminal rate is, but I mean, let's just say it's 3.5 for a big round number. I mean, that means the Fed is fairly restrictive, which is the view they've stated, and they're going to kind of gradually cut themselves, you know, back to that. Why has that moved higher lately? Simply put, it's the data. I mean, you've had 2 consecutive upside, you know, surprises on the inflation. You've got Atlanta GDP tracking 3+%. Yeah, we got a weak payrolls report, but that's actually the outlier. compared to the other data that we've seen over the last month. So I think the market's reevaluating how fast the Fed is going to cut and what is their ability to continue cutting if next year you have either tariffs or very sort of deficit-driven fiscal spending. So I think it's the data and it's the outlook for what policy is going to look like next year, and that's why that's re-rated higher.
Stuart, I'm really glad you're here because Matt actually brings up another debate that we've been having on this desk. Maybe you can help us resolve it. When it comes to what the Fed's goal is in this cutting cycle, do you think that they're going to cut down to what neutral eventually will be? Is the terminal rate the same as the neutral rate in this cutting cycle?
I mean, I think they'd like to get there. Whether they're going to be able to get there, I think remains to be seen. I think, their view was we are quite restrictive. Let's get ourselves 50 basis points of cuts in to get ourselves closer to neutral because we know we're kind of data and policy dependent from here. So, look, I think ideally, if the economy is growing, call it 2%, they would like to gradually cut themselves back to about neutral and get there. But, you just have timing issues. They don't want to cut too aggressively fast, and they're sort of victim to the data that's incoming. So, I think that's their goal. I think their goal would, be to get back to neutral. But will they be able to? We'll see.
So did I win that one?
No, I don't think so. So
the
debate is are the two terms interchangeable? And my point,
it's situation dependent.
In a friendly and respectful way, is that
of course.
The terminal rate is something that you can put your finger on and say, after a cutting cycle, that was the terminal rate.
But you can,
the neutral rate is something that nobody knows. It's like mumbo jumbo. You can make up whatever neutral rate you want.
It changes in every cycle, though, too, as does the terminal rate.
But it's not ever anything solid. It's so nebulous.
But neither is the terminal rate.
I'm going to switch us slowly away from this conversation. We talk about it a lot, as you can see on this program. But, we've been trying to balance, to the point of this whole conversation, tomorrow, the elections, or, a week from now or days from now when we know what happens, and the Fed meeting where we'll know the outcome on Thursday. I also want to talk about what's under the hood of the equity market here, because what's interesting is we've been talking about those Trump trades that have been performing, but what we haven't been talking about is the ones that have not been. For example, for the last 3 months, you've seen the energy sector lag the S&P 500. You would think that would be performing if you think that Trump were to win this election. So what do you bet on at this point if you see the odds turning towards his favor as we see the votes come in?
Yeah, I mean, our view has been, trading tax rates, trading banks in particular are the cleanest ways to do it. To your point on energy, and I throw healthcare in there as well, those had generally been viewed as big election trades, but there's a lot of moving parts with that where you say, well, Trump is going to drill, but we're already drilling, 13.5 million barrels of oil per day. So is Trump coming actually going to push energy prices lower? And I want to own servicers instead of the energy sector. So I think there's a couple moving parts in the energy sector that have held that back. And you might argue, same is the case on healthcare. Certainly, Trump might be less aggressive about healthcare spending, but he might be more open to M&A. And M&A is positive for SMID healthcare. So to me, healthcare and energy are both they fall in the election category, but they're just not as clean as the other trades. And we've just told people to focus on banks and small cap and value for that reason.
Stuart, before we let you go, we have one question quickly here. When it comes to tomorrow night, you're watching the results come in, your eyes twitching a little bit. What is the one line that you'll be watching? Is it S&P 500 futures? Is it the 10-year? What's your pick?
I mean, well, first off, it's what's going on in Pennsylvania. Obviously, is number one. But yeah, I think for us, I'm an equity strategist, so it's S&P, and beyond that, it's long-term bond yields. Because I think, our view is positioning is cleaner. There is space here for the equity market to rally after the election. What could trip that up would be you get another sort of inflection point higher in long-dated yields, and that kind of kneecaps the rally. So those are the 2 or 3 things.
Stuart, it's great to see you. We'll see you on the other side. That is Citi's Stuart Kaiser. Meanwhile, let's get a look at the stocks that are moving ahead of this opening bell. We'll do that with Abigail Doolittle.
So I know, Katie, that many of us here at Bloomberg don't watch the Dow all that closely, but some investors do. Take a look at NVIDIA popping higher, up 1.7% on its inclusion in the blue chip, the former blue chip index. Some stocks still blue chip. Sherwin-Williams will also be included, that stock also higher in the pre-market. Trading to the downside, though, the nuclear space, which has really been in rally mode, massive rally mode this year, based on the need for more energy to fuel AI and data centers. Well, today it's taking a bit of a breather. This after Constellation Group reported earnings. While they beat, it seems that investors thinking it's not quite enough given this year's massive move to the upside. And then finally, DJT, Trump Entertainment and media. Actually, it's now flipped higher to the pre-market. Earlier, it had been down at about 8%. This following a greater than 300% rally from the recent bottom to the recent peak, but from that peak down more than 50%. All of this is one way to say, and this is something, I guess, for Stuart Kaiser, volatility. These shares very, very volatile into the election.
It's the only thing that's certain today, Abigail. Volatility is higher. We thank you so much for your time. Now, coming up, we're going to talk more about the election. Harris and Trump hitting battleground states as the polls signal a razor-thin race. We're going to speak to Henrietta Trey's Veda Partners Economic Policy Research Director next. This is Bloomberg.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
So a number of people, I think, from Homeland Security and or the CIA or NSA have gone to Capitol Hill and said that TikTok is a danger to our national security. But the public hasn't been given that much detailed information about what the threat is. How much of a threat to our national security is TikTok?
The People's Republic of China acts adversely to the interests of the United States in different ways. One of those ways is through the dissemination of disinformation, the intentional communication of false statements, and TikTok is an extraordinary avenue through which to disseminate disinformation to millions and millions of people.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Let's get now to high interest to look at what's making headlines around the world. Oil is higher after OPEC Plus agreed to push back its December production increase by 1 month amid escalating tensions in the Middle East. Saudi Arabia and its allies delayed a series of monthly output hikes until early next year. Meanwhile, the Wall Street Journal is reporting that Iran is planning a counterattack on Israel involving more powerful warheads and other weapons. Berkshire Hathaway slashed its stake in Apple by roughly 25% last quarter. That helped to boost its cash pile to a record $325.2 billion. Operating profit at the conglomerate Berkshire Hathaway declined and buyback. Sorry, let me just start over. Can I start over here? Operating profit, I'm not sure about. It's down. But the firm declined to buy back its own shares for the first time since 2008. I got that one right. Judy Dimon, the wife of J.P. Morgan CEO Jamie Dimon and a prominent political donor, canvassed voters in Michigan over the weekend in support of Vice President Kamala Harris's presidential bid. Jamie Dimon, for his part, has declined to publicly endorse either party's candidate, pledging that he would work with whomever is elected. Shonali?
We were all watching Jamie. Turns out we should have been watching Judy, Matt. We're going to talk, though, more about tomorrow's presidential election. We are joined now by Henrietta Trace. She's Veda Partners Economic Policy Research Directors. And, you know, while so many people are watching regions, states, the swing states in particular, I want to talk about demographics as well, because ultimately that's going to be what matters when it comes to the vote at the end of the day. People are watching young white men, their turnout, women across the country, black voters, and of course the turnout in those swing states. What is going to be what moves the needle at the end of the day?
Well, right now we've had in the early vote a massive pull forward of rural Republican voters. This is a strong Trump-supporting demographic, and they have come out in droves, especially early on in the early voting cycle about 2 weeks ago. And that sort of started to crest in the middle of last week and has since declined across Georgia, North Carolina, and Nevada. So what we're focusing on now in the latest data that we've all gotten over the weekend is a really remarkable shift that portends a lot of problems for the Trump campaign, as the black voter base is now up from what had been about a 72% very tepid support for Kamala Harris for the bulk of this campaign cycle is now at 87% in Georgia, 84% in Pennsylvania. And that is going to override what the Trump campaign is hoping will be a new basket of voters. If they've migrated back to Kamala Harris, their resting place for the last, decades worth of election cycles, the Trump campaign does not have enough new members to drive it to victory this year.
Henrietta, I actually want to zoom out a little bit just from demographics and talk about some of these national polls, the final ones that we're getting, since it's causing a lot of disruption in the markets today. Of course, you think about the poll from the Des Moines Register, for example. You have the New York Times Siena survey, all of these showing Harris a little bit ahead at this point. But I feel like, we're talking about these numbers in some cases, and it's just still within that margin of error. It's still within a dead heat, a photo finish, whatever metaphor you want to use. I guess I'm trying to say it's very, very tight, and it's interesting to see the market reacting so strongly at this stage in the game.
Right. Well, the market is correcting. They got overly confident. I would say 75+% forecast for Trump winning. The most extreme questions that I got over the last 2 weeks were, what if it's not a red wave? What if Democrats take the House? The baked-in assumption on the street was even more aggressive than Polymarket's forecasts or predicted, which were in the 66% range. I'd say the street was at 75, 80. So what's happening right now is the street is correcting for overconfidence for Trump. And I think that's appropriate. The margins have never suggested that Trump is going to run away with this. And when you're looking at the top line numbers, at this point, what I see in the suburbs, where in Ann Seltzer's poll, she's ahead by 23 points with the suburbs. Those are the largest groups of voters in America, and especially with women, which is also the largest group of voters in America. So without the suburbs, you can't win. And the suburbs have dictated the last two election cycles, for Trump in 2016 by 4 points and for Biden by 2 points in 2020. And right now, the narrative and all the polling out of all the swing states shows Kamala Harris winning in the suburbs.
I don't remember last time, 2020, I wasn't living in this country, so it wasn't the same thing. But
you have an excuse.
In 2016, I hadn't moved to Germany yet, and we all watched, the election coverage until we found out that Trump had won, Hillary Clinton had lost in the very early hours of the morning. It wasn't too late into Wednesday at that point. When do you expect us to know the results this time, and what's different between now and then?
I'm actually pretty optimistic that we're going to look a lot more like 2016 than 2020. So you're right. It was called at 2:35 on Wednesday morning in 2016. And I think we're going to be in a roughly similar place, 3, 4, 5 in the morning on Wednesday. We should know. You'll start to get the earliest data out of Georgia. What has happened is the states, especially the battleground states that were so critical to the 2020 election, they've updated and revised and refined their laws around reporting and getting ballots into the election commissioners and into the Secretary of State. And Georgia is going to start requiring you to publish that data at 8 p.m. So if there is a signal of anything other than Trump winning Georgia at 8 p.m. out of certain districts in Georgia, you'll immediately know that we're in for a surprise of a night, and it might not be close. It just so happens that my forecast is that Trump wins Georgia and North Carolina. Those are some of the states that I expect information from first. So if it is a continuation of things look really good for Trump, then our status quo is pat. But if there's any signs of weakness for Trump, it'll come from there first, and that would be a very positive event for Harris. That's just going to be East Coast to West Coast throughout the night.
All right, well, we should know soon enough, soon being a relative term here. Henrietta, great to get your thoughts. That, of course, is Henrietta Trey's of Veda Partners. And tomorrow, Joe Matthew and Kaylee Lyons will have a 2-hour Balance of Power special to kick off our election night coverage, followed by Bloomberg's Election 2024 special beginning at 7 p.m. in New York. A really interesting conversation with Henrietta there. And I like how she phrased it, that word she used, an overcorrection. That's what we're seeing in the markets today. Did it ever make sense that we had such a big run-up, of course, that confidence that Trump was going to win?
You know, this is where we go back to the polls are not the election betting markets, where there's still a significant spread even between those markets. So things might get interesting over the next couple of days. And for everyone's sake, let's hope it's called by Wednesday.
Really, to me, was the Treasury yields rising that showed the Trump trade on the up and up. But as you point out, we're also concerned about the deficit and debt that we're going to have under either candidate, no matter who wins.
Now he's concerned about the deficit.
No, of course. I've always been a little. I mean, I think personally it's concerning, and my daughters are going to have to pay for it, I guess. But are we going to pay?
You'll be back in Germany. You know, you'll be fine.
That's probably a good point.
In any case, the market open is a couple minutes away. This is Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Welcome back to Bloomberg Open Interest. Let's take a check on futures, of course. We are less than 4 minutes until the opening bell, and you can see the setup pretty grim right now. You have the S&P 500 down a little bit, and then it gets worse from there. Big tech, of course, feeling some pain today. The NASDAQ 100 down about 0.3%. The small caps, your Russell 2000, off by about 0.4%. All of the action is in the bond market this morning. Of course, 10-year Treasury yields down about 10 basis points or so. Maybe some of that Trump trade unraveling, as Henrietta Trey's told us, a little bit of an overcorrection rather, underway. We'll discuss all of this and more with JP Morgan's Phil Camparelli coming up next. This is Bloomberg.
In recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that was started in 1977 when by then I had a little research station and 4 of my students were kidnapped and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, you know, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
All right, we are just moments away from the start of trading. You see 20 seconds to go on this Monday before Election Day. Take a look at futures. We're now showing red numbers. They have been green for most of the morning, so getting a little bit lower into the bell. You hear it on the New York Stock Exchange. Digital Realty ringing the bell down there. I don't recognize any of them, but I'm looking. Here's Scott Soshnick. Unbelievable. Used to be the sports reporter for Bloomberg News. Now I think he's the editor-in-chief at Sportico. So ringing the bell at the NASDAQ market site, that is very cool. Recognize a number of faces there, former Bloomberg writers. That's fun. Let's take a look at what's going on in terms of the indexes. It may be a little less exciting because it doesn't look like Katie Greifeld were moving much at all at the start on the major indexes.
No, this is very much the day before a very big event. Of course, you can see the S&P 500. At least the color changed, at least for right now. We do have green when it comes to the S&P 500, but we're just flat on the day. Things get a little bit more interesting as you go along the board. You can see the NASDAQ 100, a little bit of weakness when it comes to big tech right now, currently off about 0.1%. Small caps, an interesting space to watch here. Of course, as we see all the gyrations in the bond market, the small cap index, the Russell 2000, off about 0.3%. If you take a look under the hood, actually, we have plenty to talk about. So let's talk about Viking Therapeutics right now. Shares rising after a study of its experimental weight loss drug showed promising results in what could be another winner in the obesity drug fight. That's good for about a 7.4% rally, Shonali.
Also looking at some index rebalancing trades here. I know you were watching NVIDIA this morning. Now it's up about 1.3% as the market opens. Of course, it is joining the Dow Jones Industrial Average. Sherwin-Williams is as well, up almost 6%. Remember, these are replacing Intel and Dow. Makes the index a lot more interesting to take a look at. And of course, those rebalancings are what a lot of traders out there are keeping a look on. And it's a breath of fresh air outside of those election trades, Matt.
Yeah, absolutely love to see other news than that. However, I'm going to go right back to the Trump trade here. DJT, those shares ahead of the election are up 2.5%. However, they have been absolutely clobbered in the last like 3 or 4 sessions. So to the extent that you can take a signal from DJT shares in terms of who's going to win, of course, DJT runs the former president's Truth Social business. I guess the odds are looking a little bit better a few minutes into the trade. Let's take a closer look at the election trade with Bloomberg's Abigail Doolittle. Abby?
Although, Matt, you probably have to think about the fact that that stock up more than 300% into the recent sell-off and still up, I think, about 75% from its SPAC IPO earlier this year. So lots of interesting signals to watch, including today, stocks barely moving. Investors are a little bit nervous. To the downside for the former president, take a look at the dollar falling against the Mexican. He, of course, had a strong stance against Mexico. So the peso during his last administration seen as one of the poster symbols or markets to watch around sentiment toward him. So negative, as is Bitcoin, his administration, his possible administration, seen as being pro-Bitcoin. One thing that does seem very certain in terms of all these mixed markets, volatility. Take a look at this VIX at nearly a 23 handle, even though we have the S&P 500 barely moving. Let's look at this relative to the odds for both VP Harris and the former president, and it's been all over the map. You can see since she entered the race, at one point Trump had been closer to 70%. At one point she had been closer to 10%. Right now VP Harris leading it with 55% and Donald Trump at 51%. Very, very tight. We're also watching the dollar because the dollar sliding today down about 0.6%, the worst day going all the way back to August. And this is a look at after the 2016 election in orange, the 2020 election in white. The point here is after Donald Trump won in 2016, in the near term, the dollar did very well. In the near term for President Biden, less well, and then less well in the month and quarter later. A year later, though, it was a flip. So a lot of information here, and I think everybody's watching this very, very closely, Katie.
Yeah, it'll be fun to add another bar to that chart, of course, for the 2024 election. Abigail Doolittle, thank you so much. Let's keep the conversation going now with JP Morgan multi-asset portfolio manager Phil Camparelli joining us at the desk. Phil, it's great to see you.
Good morning. Good to see you.
I'm going to ask you the question I asked us about 30 minutes ago, and that is, are we talking about the right thing? When you think about what matters for this market going forward a couple weeks from this specific one, are you paying more attention to the election or to the Federal Reserve meeting on Thursday?
I'm going to split the difference and talk about the U.S. consumer, Katie.
All right,
that's like our true north as multi-asset investors. And I'll talk about the Fed in a second as well. But the U.S. consumer, we may be divided tomorrow. It's 50-50. We see it every poll. But one thing we are not divided on, and extremely bipartisan, is all of our willingness to spend in this country. So let's talk about what October taught us. The first thing was consumer confidence had its biggest jump since 2021 in the reopening trade in October. Consumption as part of third quarter GDP, highest since the first quarter of last year, 2023. And then, oh yeah, we found about $1 trillion because the savings rate was revised in October, and consumers, oh, they have a little bit more savings in their back pocket. All of that is leading us to believe that we should be overweight stocks here, no matter who wins tomorrow. Because the U.S. consumer, and whoever is president, is going to inherit what we think is a pretty nice U.S. consumer. You mentioned the Federal Reserve. Yes, rates have jumped. Do you know that the average 10-year rate in 2024 is 4.2? We're at about 4.28, as you can see on the screen. And the S&P eked out about a 20% return this year with rates up this high.
Just a casual 20%.
Just a casual 20%. So you put all this together as an asset allocator. Again, we're overweight stocks. We're overweight credit, no matter who wins this election tomorrow. And we're really excited about what we think the next catalyst is going to be, which is all these companies saying, okay, we don't know who's going to win, but once we get a winner, history has proven, going all the way back to the 1950s, that capital expenditures, private investments start to pick up after an election. So I'm trying to be as bipartisan as possible with this view. This is a nice setup for investors.
All right, but what about the Fed? I mean, does it even matter what the Fed does? Are they really responding to data? Do you care? As long as the consumer's strong and this economy is pumping along at 3%, aren't you still going to buy stocks?
Yeah, Matt, here's something I'm not going to hope for over the next few meetings. A 50 basis point rate cut, okay? Because I think what a 50 basis point rate cut tells us, and you mentioned 3%, nobody had 3% GDP on their bingo card in the second quarter or the third quarter, including Jay Powell and his buddies down in Washington. So our biggest risk here isn't the recession risk, because a recession is defined as 2 consecutive quarters of negative GDP growth, negative job creation. That seems like a low probability event. We're worried about that other tail risk, which is growth too strong to take the Fed off the table? Matt, that's not priced in. So I'm thinking about it the other way.
So to the extent you think that the consumer is propping this market up, you think that...
And the economy, right.
And the economy is great. What do you tell people who say, well, okay, the fiscal has been fighting the monetary? This idea that there's been enough stimulus to hold this consumer up, when does that start to wear off, particularly because the decision-making, depending on who you get in office, is going to be different?
Yes, Nolly, good question. And I think that's the biggest pushback that we get, is this 100% debt to GDP in this country and rising.
Recession levels.
And rising, recession levels, and we're nowhere near that. And I think the one thing that would get our attention with the consumer is less fiscal and more, are real wages diminishing? Real wages is defined as wages minus inflation. The good thing about wages is that they're 4%, and inflation is below 4%. So if we have an environment where that differential is closing, that's, I think, when we get worried about the U.S. consumer, and it's just not there yet.
Well, let's talk a little bit more about that Venn diagram when it comes to deficits specifically. You were mentioning no matter who wins your overweight stocks right now, where does that leave the Treasury market? Because the conversation, particularly around the long end, has been, you've seen yields scream higher because we're all worried about the deficit. How do you invest around that?
Yeah, so as I said, the average rate this year was 3.2 on the 10-year. So these aren't necessarily, 4.2 on the 10-year. So these aren't necessarily, screaming levels. I would say, and going back to that tail risk, that if inflation is driving rates higher, and that's just not the case right now, that would get our, okay, oh my goodness, you now have growth rates maybe coming down, a stagflation type environment, and rates are high. That is not what we're seeing. Okay, so I would say rates at 4.2, 4.3, fine, driven by growth, as I said, the consumer. But if rates are rising because all of a sudden the Fed has to come off the table because inflation is rising, that would be a problem. That's not priced into markets.
I'm going to take a page out of Shanali's book and look at GRR for a second and see who's been doing well, who's been doing poorly. I mean, year to date, obviously the big hyperscalers have been crushing it. Energy's lagging but still gaining. Real estate's lagging but still gaining. Healthcare's lagging but still gaining. What do you like? If you were going to pick your favorite sectors for the rest of the year or 2025, what would it be?
Yeah, first off, U.S. exceptionalism is what we're going for. Okay, so when I'm talking about our overweights, we have about a 10% overweight to stocks in a 60-40 portfolio. That's 70% allocation to stocks, and 3/4 of that overweight is in the U.S. Okay, so U.S. exceptionalism, no matter who wins tomorrow, we think will be hard to fade. I would say the bulk of that is cap-weighted. Okay, so it's a cap-weighted S&P story because our view is in Goldilocks. Our view is more of the soft landing story, where the Fed is carefully and methodically taking rates lower over the next few quarters, which continues to point to the mega-cap tech names, the quality names in the index. But our latest ads, Matt, have been in both mid-cap and equal weighted. Okay, so again, the bulk of the overweight is cap weighted, but in order to really diversify the breadth of U.S. exceptionalism, which is what we're saying, mid-cap and equal weighted have to be part of the solution.
For the large cap stocks, particularly when you think about those 2017 tax cuts, even if Trump were to win the presidency, how much would the bond market or even Congress allow those tax cuts to continue? And what would that mean in terms of how you have to discount that tax effect from those large caps? Does the thesis play out that these companies can do as well with paying more to the U.S. government?
Yeah, so I think unless you get a blue sweep tomorrow, the Tax Cut and Job Act will be extended. So any shade of red in Congress or in the White House, obviously, right, would extend those tax cuts. For us, again, going back to the story of the quality trade, you know, those companies we think will continue to perform pretty well as we look into the next few quarters because they don't need a rate cut. And again, our whole bias here is I don't want to see a 50 basis point rate cut. And we are believers. We only have a 15% chance of recession. I think the Fed is going to be pretty careful. If they go once a quarter next year, that would be, you know, that's their expectation. And we'll see if that even happens. I think the better signal for the bond market are actually credit spreads. You know, credit spreads have never really budged. 10-year note has been all over the place. Federal funds futures market continues to get whipsawed, whereas credit spreads, I think, have shown a pretty nice story of the U.S. avoiding recession. Again, 15% is as low as we can possibly get a recession probability over the next 12 months, and that's where we're at.
Back to the fundamentals. Phil Camporelli of JP Morgan, we thank you for joining us on set, of course, before the big day. Now, coming up, we're going to dive into the latest on the obesity drug fight. This has been another theme underpinning this market. Viking Therapeutics saying it's seeing promise with one of its weight loss drugs, another dog in the fight. We're going to talk about it next. This is Bloomberg.
In case you missed it on Bloomberg Technology.
We're excited to really change the expectations for space companies where you have this always-on, reliable, and frankly dynamic satellite connectivity that you would expect of your power grid or of your cell phones. And so we think that this is a huge opportunity space, and our first contribution to it is through shared infrastructure.
You can see this whole ecosystem developing, and you have an exponential growth right now because easier access to space means more demand for space, and that's the definition of an exponential growth function. So if you think about someone like Varda, who is only possible now because access to space is cheaper and easier, we're demanding more access to space.
I think that's what's so exciting from a business perspective, is the fact that if you can do it, you know, you're one of a few numbers of organizations in the history who've actually pulled it off. And so it creates a very defensible position, because again, space is very, very hard.
Don't miss Bloomberg Technology live every weekday.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling.
Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lyons deliver news, insight, and analysis live every trading day. Balance of Power live around the world every weekday, only on Bloomberg.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
All right, it's time now for our top calls. Some of the analyst action in focus this morning. And first up, Bank of America raising Peloton to a buy. The firm says that its profit outlook is no passing fad under the company's new CEO. Next up, Morgan Stanley upgrading Roblox to a buy. That's after the video game company's third quarter results beat expectations. The analyst says that the company is accelerating its market share gains. And finally, we have BTIG cutting Fiverr, saying it's no longer a buy. The analyst says that he's less optimistic on small and mid-sized business hiring and sees AI risk ahead, Matt.
All right, let's get to the healthcare sector right now. Viking Therapeutics says higher doses of its experimental pill increased weight loss more than previous iterations of the drug. Patients shed, I think, 6.8% of body weight over 28 days on 100 milligrams. It's the company's second breakthrough in the weight loss market this year. Let's talk about it with Bloomberg Intelligence pharma analyst Michael Shaw. So, Michael, this looks promising for Viking. Remind us of the actual chemicals here. Are we talking about another GLP-1 drug similar to the ones coming out from Novo Nordisk and Eli Lilly?
Yeah, so Viking's drug is VK2735. So it's a dual agonist of an oral drug, GLP-1 and GIP. So it's essentially targeting two receptors there. And it, yeah, I guess it was one of the most eagerly awaited kind of data sets at this conference on that right now.
Let's talk a little bit about the competition. Of course, Matt brought up some of the heavyweights here. Of course, you have Novo, you have Lilly working on a pill here, Pfizer too as well. You think about Viking Therapeutics, a pretty small company. I think the market cap is still around $8 billion. How did Viking potentially get here before some of these other big established names?
Well, I mean, I think several companies are targeting the space simply because, it's a massive opportunity. When we look at Viking's kind of offering, they've got, both an oral and an injectable, which I guess is appealing. And looking at the profiles, particularly the oral, 6.8% placebo-adjusted weight loss, no plateau in the curves at 28 days, so that suggests further weight loss beyond that time frame tested. And, when we compare that to kind of rival GLP-1s, it looks very favorable. I think what's more important here is also the GLP-1, the tolerability profile of this GLP-1 drug. So there are no discontinuations. There's only mild nausea observed at all doses. And also when we look at some of the other GI side effects, so things like vomiting, etc., the rates here also compare very favorable to rivals. So tolerability is obviously key with these drugs, and it looks like Viking's got a very well tolerated asset here.
Michael, this is still a company that's less than $10 billion in market value. And if I'm, say, Pfizer, I look at this company and say, okay, this gives me something that would make me have a competitive edge. How much M&A is surrounding this company, M&A discussion? I mean, is this a company that should be in the hands of a larger giant for distribution purposes or otherwise?
Yeah, absolutely. I mean, like speculation always kind of surrounds kind of biotech companies, especially ones with competitive assets. Whether this is going to come in the form of an out-licensing deal or a full takeover, I think that remains to be seen. I mean, looking at the enterprise value for this company, $7 to $8 billion already. Any potential suitor is going to need pretty deep pockets. But again, it's got a competitive, well, more than one competitive asset, and essentially, we think a deal will be needed, or some sort of deal will be needed, to compete with the likes of, the Lillys and Novos out there, given, not least because, a commercial footprint is needed.
All right, so we'll keep an eye on that one. Michael, really great to speak with you. That, of course, is Michael Shaw from Bloomberg Intelligence. And the conversation continues on Wednesday. Of course, we have Novo Nordisk reporting earnings. I'll be speaking with the CEO of Novo Nordisk after that, Lars Frogard Jorgensen. Now, coming up, before we get there, we're going to take a look at how Wall Street is preparing for election night volatility. That's next in our Wall Street Beat. This is Bloomberg.
and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
And it's time now for the Wall Street Beat. We're looking how Wall Street is preparing for election night. It's the subject of today's Big Take, co-authored by Catherine Burton from Bloomberg, who joins us now on set. And this first quote you have in the story, tomorrow is going to be a blindfolded mud wrestle in a minefield. You're not seeing quite that level of anxiety in markets yet, but I'm very curious to what people are watching for tomorrow night.
Not yet. Let's just say. I mean, already we've seen markets turn a little bit today, which is pretty interesting because up until then, people were kind of betting that Trump would win. So, people are preparing with a lot of hedges. As I said, they were kind of leaning into the Trump trade, but we can see today that their conviction is maybe not as much as we had thought before.
So what do your sources define as the Trump trade? Is it selling treasuries? Is it buying the dollar? Is it buying shares in DJT? What is the Trump trade to the people that you're talking to?
Mostly just long stocks, short bonds, long crypto, long dollar.
Let's talk about the people themselves. I love this part of the story. Of course, there's staffing levels. That's interesting to think about. There's also what people are eating. I love this quote that there's no keto on election night. Apparently, people are carbo loading for this.
Yeah, it's like the marathon.
Exactly.
Yeah. Cake. Maybe cake.
Yeah. Lots of pizza. Pepperoni pizza is another big one.
Staffing actually as well too, because like Goldman is a good example here where they might have hundreds of traders on site, people across the world. I was initially told people are going to be at election parties. So it's interesting to see how that's changed. How much are banks, hedge funds looking to have staff on site?
Really a lot more, and brokers, even small brokers. We talked to people that said we've never had someone stay overnight on an election night, and now today, tomorrow's election could be that time.
It's interesting. I was in London for Brexit, and it was the same thing. I mean, people were up all night. Trading floors were completely staffed, and I mean, obviously, we didn't know about the surprise that was going to come after. What are they planning for in terms of the rest of the week? Because we may not know who won until Wednesday, Thursday, or Friday.
Well, people have a fair number of hedges on that should work no matter who wins. People think that either way there's going to be more inflation, so there are break-even trades on curve steepeners as well. So there is some idea that even if we don't know immediately, those things should protect the portfolio a little bit.
All right, Kathy, great having you on the program. Look forward to your coverage. I hope you get some sleep next weekend. Catherine Burton there from Bloomberg covers hedge funds for us. Coming up in the next hour, Joe Lavorgna is going to join us from SMBC Nikko on the economic outlook. Remember, he was also the head of Donald Trump's National Economic Council. Then Compass CEO Robert Refkin talks mortgage rates and housing supply. So we're going to get the view on the residential market, where affordability is off the charts and mortgages are headed back up as well. This is Bloomberg.
Like, let's say somebody is an Uber or Lyft driver today, where they can actually sort of manage a fleet of cars, and sort of manage, 10, 20 cars, and just sort of take care of them like a shepherd tends their flock. You have a little flock of cars, and you're the shepherd, and you take care of your flock of cars. I think that'd be pretty cool. I think it's going to be a glorious future. It's going to be really something special. So, yes, good, all excellent questions. We do expect actually to start fully autonomous, unsupervised FSD in Texas and California next year. And that's with the Model 3 and Model Y. And then we expect to be in production with the Cybercab, which is really highly optimized for autonomous transport in probably, well, I tend to be a little optimistic with timeframes, but in 2026. So, yeah, before 2027, let me put it that way. We'll make this vehicle in very high volume, but well before that, you will experience a robotic taxi via the Model 3 and Model Y program, and Model S and X too. But your 3 and Y will achieve unsupervised full self-driving with permission in wherever regulators essentially approve it in the U.S. and then to follow in outside the U.S. So, and it's Cybertruck too. Yes, of course. Sorry, I don't want to forget. Yes. All our cars are basically all cars that we make. So.
Of our debt floating and some fixed.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, but we also have to be nimble around that as well because things change by the day. I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. They may not be a buyer at this point, but I do want to spend a lot of time in front of that other set that is a buyer at this point. They're interested. They want to be an early adopter of the stock. They're interested in the story.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. Election day is tomorrow, and the candidates are spending their day in battleground states where polls show the races are razor thin. This voter in Georgia is going for Kamala Harris.
I think her message overall is that she would be a president for all people and that she's for diversity, and not just in people, but diversity over bodies, diversity over choice.
This man putting in a plug for the Republican.
Everybody has to get out that hasn't voted and get out and vote. You know, and if we don't vote on, quote, personalities, but on what really helps America, I think the vote will go, Donald Trump's way.
Mr. Trump is holding a rally in Raleigh, North Carolina this hour. He'll move on to Pennsylvania and Michigan. Harris has several stops in Pennsylvania. More than 78 million Americans have already cast their ballots. For those who will go to the polls tomorrow, American University political analyst Amy Dacey.
For people that are undecided, they have to know that there's a striking contrast between her and Donald Trump and what's at stake. The rhetoric that he's been kind of throwing out there, questioning, the election before a vote had been cast.
Republicans in one state are optimistic about one longtime lawmaker's chances of re-election.
Only 40% of registered Texans took part in early voting, and more than half 50 and older. Rice University political scientist Mark Jones says these numbers bode well for Texas Republicans Republicans, including Senator Ted Cruz over his Democratic opponent, Representative Colin Allred.
Democratic turnout looks pretty much at average. We're not seeing the numbers that Allred would need to really be able to close that 3 to 5 percentage point gap that separates him from Cruz.
Jones adding that Allred needs a higher than average Democratic turnout, especially among African Americans and younger women. Chris Fox for CBS News, Austin.
The Supreme Court has just revealed justices will hear a challenge by a group of voters in Louisiana over an electoral map that raises the number of majority black congressional districts in the state. Boeing factory workers vote today on whether to accept a contract offer or continue their 7-week strike. Correspondent Chris Van Cleve.
The cost of the strike has been estimated to be approaching $10 billion and has essentially shut down production of the 737, 767, and 777.
Boeing's proposal includes a 38% pay raise over 4 years, but no pension plan. New research proves just how difficult it is for young people to buy first homes. The National Association of Realtors' Jessica Lautz.
The few that are sneaking into the market, they're older, they're wealthier, they have higher incomes, and those are the buyers who are successfully buying.
The average age of home buyers overall now 56. That's up from 49 last year. This is CBS News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, good Monday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're streaming live on YouTube as well. So head over to youtube.com and search Bloomberg Podcast. That's where you will find us. Jess Metten sitting in for Alex Steele today. Not a good day for your ag, or not a good weekend for your ag.
Unfortunately, we're ranked 15th now after 10. But you know, at 7-2, we've been had a worse record before, so we'll see what happens for the remaining.
But Bloomberg News is Amy Mars. She's a graduate of the University of South Carolina.
Oh,
so
no.
So
House divided.
All right, Amy Mars, Jess Metten on there. All right, so we got a lot coming up today, the day before the election. We're going to check in with Skylar Woodhouse, Bloomberg News reporter on the election. Katie Kaminsky, Chief Research Strategist and Portfolio Manager at Alpha Simplex, will give us her thoughts on the markets. And then we'll check in with Ira Jersey. His Aston Villa lost over the weekend. But we're going to talk to him about Trump, trade, and what that means for the rates market, for the U.S. government bond market. That's all coming up in this hour. Let's kick it all off like we do with Mr. John Tucker in a Bloomberg Business Flash.
All right, guys, the major stock averages in the early going, they were mixed. You have 7 of the 11 major industry groups in the S&P 500 up. Energy in the lead as oil prices rise right now over 2%. The biggest drag is coming from communication services, and that's where you're going to find shares of Google parent Alphabet. In addition to the election, you know what? There's a Fed meeting this week. Kathy Jones, Chief Fixed Income Strategist at Charles Schwab, shares her view.
I think they'll go ahead with the 25 basis point cut that they'd signaled. Okay. They don't like to surprise us too much. After that, I think you could make the case for a pause. We've had better economic data. The jobs numbers, particularly with the revisions, indicate the labor market's in better shape than when they cut in September.
And shares of NVIDIA and Sherwin-Williams, they're rising after S&P Dow Jones said on Friday the pair would be added to the Dow Jones Industrial Average. Sherwin-Williams, after their earnings, those shares right now, they are up 5% after that news. And NVIDIA shares right now 1.3% higher. You mentioned the so-called Trump trade kind of reversing to some degree. The dollar and Treasury yields both lower this morning. Bitcoin was also falling. Bitcoin, that was under 69,000. And shares of Trump media, they were down as well. Right now, the S&P 500 up 5, the Dow Jones Industrial Average 62 points lower, and the NASDAQ 100 8 points lower. We check the markets for you all day long. And this report being brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. treasuries, and more on your timetable. Learn more at ibkr.com/around the clock. Jess, hi Jess. Jess and Paul.
Hello. Always great to be with JT.
Exactly. For the next 2 hours. John Tucker, thank you so much for that. Jess Menton, she is sitting in for Alex Steele here today. We appreciate that. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studios. John was just reporting here, kind of a mixed tape out there. Kind of just feels like people are kind of on the margins, just sitting on the sides. Let's see what happens over the next 24 to 48 hours.
That's right. And especially actually coming into this week, it's interesting because you've had the VIX closing above 20 in the last 4 sessions. So obviously a level that typically signals rising market stress.
Yep, absolutely. Let's check in on those equity markets with Abigail Doolittle. She joins us here in our New York City studio. She covers all the markets for Bloomberg. Abigail, what are you looking at today?
So it's interesting. We do have this tiny gain for the S&P 500 and the other majors, that NASDAQ 100 down slightly, as you all were just talking about. But for the S&P 500, it's actually on above average volume. And the volumes have been pretty solid recently. So it's about 5 to 10% above the 20-day average. So even though stocks aren't moving much, you have more people involved in the sluggish trade. Now, NVIDIA is certainly important. John Tucker just mentioning it in terms of being added to the Dow. I know that we don't talk about the Dow so much here at Bloomberg, but it's important because it does mean that the managers that follow index against the Dow, they need to add NVIDIA. This company, of course, reports November 20th. You know, big tech earnings for this quarter have been interesting. I would say somewhat mixed. They started off strong with Netflix and Tesla, then AMD not so great if you include that in the big tech complex, or less good than what people had expected. Microsoft and Meta seemed as poor. Apple not received well, and then Amazon was received well. NVIDIA, though, of course, in about 2 weeks, 3 weeks, that will be actually 2 weeks. My gosh, it's just amazing how quickly time flies. That will be certainly the big one. But today, that's the top point boost for the S&P 500. Weighed off the worst point performer for the S&P 500, Berkshire. They reported, and some of the insurance issues have weighed on their earnings. But I would note that their cash pile reaches another record, more than $325 billion. And I believe that's nearly 50% of their portfolio. So that's sort of an interesting message, especially as yields slide.
Yeah, that's just such a big issue. It has been for years now. I mean, what do you do with all that cash? And quite frankly, I just don't think there's anything out there for them to do.
Well, especially right now, after this massive run in stocks out of the 2020 lows and then the 2022 lows, you know, they say that they're not market timers, and we'll take them at their word. However, I will say it's interesting to note that they have so much cash on the sidelines, because meanwhile, while they've had that cash on the sidelines, you know, markets overall have gone up significantly. So you could make the argument that if they had deployed it, perhaps their returns would have been that much better. Now, of course, they have the value strategy, but it just remains interesting to me at a time, especially as yields come in, that they're offering less incentive to be in cash, that their cash pile just increases. What does this say, if anything?
Right. It's interesting because the last time Berkshire Hathaway had this high of a percentage in cash, obviously Warren Buffett's portfolio, the correlation to the S&P 500 immediately went on to have one of the strongest 52-week kind of spans. But then on the flip side of that, if you looked at when it had its kind of lowest position towards cash at any time in the past decade, it would have been when the S&P 500 peaked in 2011. But obviously there were a lot of different things going on when the U.S. Credit rating was downgraded that year and subsequently.
That's interesting.
There.
And that was also a brief peak. Because,
right,
I mean,
exactly.
You know, 6 months later, you're at a new all-time high.
Because the bull market
and
obviously
kept climbing.
continued on.
Yes.
Right, to your point.
That is interesting, though.
You know, something I wanted to pick your brain about, because we were reporting on our equities team after the bell on Friday. Obviously, you were mentioning about when it came to NVIDIA joining the Dow, replacing Intel. I was curious, kind of with your experience, when you think of stocks like when GE obviously was famously booted from the Dow back in, I think it was around 2018, and then in 2020, I think it was Exxon. But a lot of times when those stocks are taken out of the Dow, their stocks tend to bottom and then they perform better. So I'm kind of wondering if you've talked to any of your sources or kind of your thoughts on maybe Intel stock in particular when you're looking at its performance, or even what the technicals might be telling us after such an underperformance for a while now.
That's really interesting analysis, and I had not heard anything along those lines. It's almost like the Dow of the dog, or the dog of the Dow. The Dow dogs, is that what it is?
Right, yes.
But in a different way, not the sectors year to year, but once you're no longer included. In terms of Intel, when they reported last week, it was modestly better, the guide, but it was taken as a turnaround of sorts. The stock was up significantly relative to the technicals. Pulling up the chart right now, it's really too early to say. That 60% slide that the stock was in earlier this year is just, that's a lot to recover from. They need to continue to show what they're going to do to turn this big ship around. I mean, it's amazing. Paul, you in particular would remember this, and just too, and John, in terms of Intel. I mean, 10, 20 years ago, it was the chip company in the world. And now the idea that it's the one lagging, it's just interesting how these things tend to be cyclical.
Yeah, and then NVIDIA has kind of taken the mantle, but they're all out there in that Santa Clara area where my son goes to school, and I says, go study all that chip stuff and get a job at one of those places. Abigail Dillwell, thank you so much. We appreciate that. Abigail Dillwell, she covers all the markets for Bloomberg News. Let's check on what's happening on the campaign trail. Skylar Woodhouse, reporter for Bloomberg News, joins us remotely from Howard University down there in D.C. Skylar, what are the candidates doing today, the day before the election?
I mean, it's Election Day Eve, so it's a very exciting day here. Vice President Harris will be traveling all over Pennsylvania today. She'll be blitzing across the state in Scranton, Pennsylvania, which is Joe Biden's hometown. She'll also be traveling to Pittsburgh, Philadelphia, and Allentown, Pennsylvania. As for former President Donald Trump, he is going to be crisscrossing multiple states. He'll be in Pennsylvania, North Carolina, and Michigan. So both candidates are really out there today trying to shore up those final votes.
As we know, Skylar, when it comes to Harris and Trump, they're virtually tied in a number of battleground states. What do the latest presidential polls say, and what do you think they might be missing?
You know, it is a close race. That is something we have seen all throughout this campaign. It is just neck and neck. You know, we're seeing the polls right now showing that Vice President Kamala Harris is taking, a little edge forward, but it's still a very close race. And I think what we're seeing from the candidates is that for what we've heard from Vice President Kamala Harris's campaign this whole time is that, they're just trying to move the needle enough so that way they can win those states, especially Pennsylvania, which holds the most electoral college votes across the battleground. So that is very important for Vice President Kamala Harris. And as for former President Donald Trump, he is trying to just, I think, secure as many votes as he can across the battlegrounds. Given what the polls are showing, I think he's out there trying to make up as much ground in all of the states because the polls right now are showing that Harris is taking that edge.
Skylar, we're hearing from a lot of the political experts that the turnout's going to be really, really important this time around. What are you hearing from both camps as to how they think turnout will be this year?
I mean, I think turnout, what we're hearing is that it is just going to be huge numbers. We're already seeing really big early voting numbers. People are mailing in their absentee ballots. So the early signs are already showing that voting is going to be record-breaking. And what we're even going to see tomorrow are probably even more numbers. And, there's things to pay attention to. How weather will play a factor in Election Day. It's looking like it might be a good day. So, I think that'll probably help with voter turnout. But both candidates are really hoping for those large numbers of voter turnout because, as we know from 2020, when it was such a narrow win, it will be even more narrow this go around. So every vote really matters for the candidates.
Hey, Skylar, for Donald Trump to win the election, he, of course, would need to flip Michigan, Wisconsin, as well as Pennsylvania, 3 crucial blue wall states from Harris. Where do we stand specifically now in those states with the race so close?
Yeah, I mean, I think former President Donald Trump, he is still, he has a lot of support among his, very loyal supporters. And what has been his struggle, his campaign struggle, is how they navigate, abortion rights. And that has been something that Democrats have really leaned on this campaign season to show, to talk about how, they are going to protect abortion rights. And for Donald Trump, especially in those battlegrounds, when trying to connect with, suburban white female voters, that's an issue that for some candidates really is, sticking with them. And so, the Republican Party has kind of struggled there to make inroads with that voter group. So it's going to be tough for former President Donald Trump, but it's still going to be just as tough for Vice President Kamala Harris.
Skylar, thank you so much for joining us. Really appreciate that. Skylar Woodhouse, she's a reporter for Bloomberg News. She joins us remotely from Howard University down there in Washington, D.C., the day before the election. And I guess, these candidates, they're sticking to their script, which is sticking to those swing states. I guess that makes it a little bit easier in terms of travel, but you're back and forth to a handful of states seemingly every day.
I know that David Gura, obviously from Bloomberg, he was in Pennsylvania over the weekend, and Tim Stenovic and I talked to him on Friday about this. And obviously, when you think about Wisconsin as well, when he was out there last week too. So he was talking about just kind of the mood in the states and just how close it is in these battlegrounds.
Yep, absolutely. And you can join us for complete coverage of U.S. election results Tuesday night. It kicks off at 5 p.m. Eastern with a special 2-hour edition of Balance of Power, followed by coast-to-coast Team Bloomberg coverage at 7 p.m. Get live election results and analysis with context Tuesday night on Bloomberg Radio, television, and the Bloomberg Podcast YouTube channel. So we will have you covered here. Looking at the equity markets open here for just about 45 minutes. Absolutely mixed here. The S&P up about 4 points. We'll have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day.
We ask a startup how they're going to grow, how they're going to get users, and they look at us like it's the first time they've ever heard that question. Bad sign. So some sensible idea to try here first. Paul Buchheit once spent a bunch of time looking, one of the YC partners, spent a bunch of time looking at the traits of our best founders and tried to distill down what they were. And he came up with frugality, focus, obsession, and love. I think that is really good. I don't have much to add. But I think these are things that you should be able to say about what you're doing and you as a founder. And finally, I want to talk about why startups get to beat big companies. There are lots of reasons. I'm going to talk about a few common ones here. I think these trends are valuable enough that as you evaluate startup ideas you might do, it's worth thinking about if you fit into these. Because it's really hard for startups to beat big companies most of the time. And here are some areas where we see it happening repeatedly. So I think one difference is if you are a product manager at a big company and you want to do something that sounds like a bad idea but is a good idea, you have to get everybody from your boss, sometimes all the way up to the CEO, to say yes. So one no can kill you. If you're a startup, you can go to YC Demo Day. Any number of the thousands of investors can say yes, and you get to have a crack at it. So it's a very different mindset. And for those ideas that sound bad but are good, because of this phenomenon, this one no versus one yes, startups can win. In fact, startups usually do beat big companies in that category of ideas. So look for ideas that sound bad but are good, and where you are much more likely to get one yes than someone at a big company is to get all yeses. Another area where startups usually beat big companies are in very fast-changing markets. Startups' great advantage is in agility and speed. The more a market is changing, the higher the number of decisions you get to make, and the higher number of tweaks to your product and your strategy you get to make. And you want to optimize the number of those decisions that someone has to make to compete with you, because a big company will make them on average worse and certainly much slower than you do. So the speed of market evolution gives you a lot more chances to compound your advantage over a big company. And then finally, startups usually win on big platform shifts. Many people have observed that startups come in these clusters. Those clusters usually come after a big platform shift. We'll stick with the iPhone example here. After mobile apps became a thing, many new companies got started that are now quite valuable. And one of the reasons here is, most large companies work on sort of an annual cadence at least. And when there's a huge platform shift, they are not good at making a big enough strategic pivot. The battleship just turns too slowly. Whereas a startup can say, wow, woke up this morning, the world is fundamentally different than it was 6 months ago. We're going to go all in on this new direction. And so that's a way that startups usually win. Or that's an area where startups usually win. There are many others, but thinking about these three, I think, is directionally a good thing to do.
It has to do more with market price discovery. And I think people have a lot of faith in sort of market pricing of odds. But then, obviously polling could be sort of a different demographic group. So what's really making a lot of people, I think, even myself, is you see the news and it's just flipping back and forth. And there are very different outlets pointing to different observations. And that just suggests how incredibly uncertain and tight this race really is. And people are probably also looking at those areas which kind of they're used to. So I think the picture is very mixed.
So, Katie, from your perspective and just maybe your equity allocation here, have you hedged it at all, or are you just positioned that we're going to be fine no matter who's kind of controlling things down there in Washington?
Well, this is a good question because as a trend follower, our goal isn't really sort of to add a discretionary view on what we do. We're just measuring where market directions are moving. And you have seen some momentum in equities over the last 6 weeks. But I think the biggest thing that people have been focused on is not necessarily just equities. It's just how much long bond signals have dissipated, even going short in U.S. fixed income in some ways, and also how much the dollar has moved. But it's a short-term move, and things are still very mixed. But U.S. equities seem to be the most robust signal, which tells you maybe we're going to be fine either way. Let's hope so.
When it comes to Congress and the makeup of Congress, and particularly gridlock, because when I've been speaking with a lot of portfolio managers, especially when they're managing money for longer term horizons, they haven't been making big bets either way, because a lot of times, even if they have certain policy proposals, as you know, it would take some time here to figure out whether or not those would get passed. So how much to you, when you're thinking about gridlock in Congress, will that make certain trading decisions in the coming months, or even having to wait on that once you know more of what that could look like in Congress when you think about the House as well as the Senate?
I think you make a good point. It's just if you think about NPV, or sort of the value of the markets, it's really about weighing the different possible outcomes. And even though we're going to have at least hopefully some resolution in terms of the election, it still is quite a long road for many different policies, particularly if you have a gridlock in Congress. And that means that status quo is probably closer than sort of these extreme scenarios, which people are trying to discount and evaluate. And so I think that that's why if you look for the overall trend, equities still remain somewhat positive, because the path to all of more extreme policy is actually a long one. And it could take time to know, and we should have more information as that changes.
Katie, in the world of fixed income, how much credit risk are you taking, if any, these days?
So we don't focus on credit risk, but I know that's been an area recently that has been very interesting, especially with yields higher. I think the fact that you didn't see a lot of credit deterioration in August was something that surprised me. We're much more focused on the directional level of yields, and we've really seen a major pivot towards higher, longer, steadier Fed reaction. And I think that sort of is obviously going to impact credit as well.
Katie, thank you so much for joining us. We always appreciate getting a few minutes of your time. Katie Kaminsky, she's a chief research strategist, and she's a portfolio manager over to Alpha Simplex Group. All right, we have an election, so I'm told, tomorrow, but we also have a Fed meeting.
Don't forget about the Fed. On Thursday, the decision instead of Wednesday got shuffled. So the meeting starts Wednesday, decision Thursday. Normally it would start on a Tuesday, but obviously election day.
So we'll still get the statement at 2 p.m. Thursday,
and
Wall Street time.
That's correct, but no quarterly dot plots, economic projections at this one. We'll get that in December.
But we'll have a press conference at 2:30. Okay.
So everybody watching what the man himself is going to say, Jerome Powell.
Exactly right. All right, let's check in with Ira Jersey with that backdrop. Ira Jersey, he does all the interest rate stuff for Bloomberg Intelligence. So Ira, again, the kind of the focus is on obviously tomorrow in the election, but I know you guys in the rates business, you pay attention to what our Federal Reserve is doing. What do you expect to see and hear on Thursday?
Yeah, thanks, Paul. There's a ton of risk events this week, right? Not only do we have the Fed meeting and the election, we also have Treasury auctions, right? So we have Treasury auction today, tomorrow, and a 30-year on Wednesday. So a lot happening in our space for sure. I think the Federal Reserve is going to cut rates. I think they have to, right? Because they cut 50 basis points a month ago or 6 weeks ago, and the way that the Fed looks at a lot of the data coming in, they still think things are slowing down. So they'll cut. But I think that what Jay Powell says at the press conference is probably going to be the most important. Will he sound somewhat more dovish than he did back in September, or will he come out and say, and this is what I do think that ultimately he'll say, is, look, December's not a done deal. In fact, we could very well skip September, because if the data continues to come in strong and we're going to go into the soft landing, which we expect, then we don't have to cut every single meeting. And I suspect that that's what he'll say, and I think that the market will then, price out most, if not all, of a December rate cut.
Of course, in the last decision in September, Mickey Bowman was actually the first dissent in nearly 2 decades, as you know, at that last meeting. Do you expect any dissents this week?
I don't think that we'll get any dissents this week, unless, of course, maybe Bowman goes again and says, "Hey, we shouldn't have cut at all," just given all the data we have. But I suspect that we'll have pretty much a clean slate. They'll say, "Okay, well, look." I think Jay Powell will be able to come out and say, okay, maybe 50 was too much last month, but look, if we guide them toward, us not cutting more than another 25 or 50 basis points over the next 3 months, then I think it'll get some people back into line. I think the bigger question is not if Bowman actually dissents for cutting, but is there someone who says that maybe they should not be as dovish as I suggest, where you might have 1 or 2 members who are more on the dovish side that suspect that they're pushing back against some of the market narrative that's currently out there, that basically the economy is quite good, and that they don't have to cut as aggressively.
Ira, the economic data recently has been pretty darn strong across the board. Is there a school of thought that the Fed does not cut on Thursday?
So there are some people who are suggesting that the Fed shouldn't cut. Whether or not they should or shouldn't, I think, is irrelevant, because it's, the Federal Reserve is going to do what the Federal Reserve is going to do. And like I mentioned, I think that they have to, if for no other reason to save face, that they need to cut this time as well. I think if they had only gone 25 basis points in September, then the possibility of them cutting this month would be significantly less. But because they went 50, they kind of have to go 25 this time. Otherwise, they're going to have to basically couch that. How do you reference that and say, oh, well, we went 50, so we don't have to go 25 this time because we already went 50? I'm not sure that they can communicate that in a clear enough way. So the Fed will go 25, and that leaves open more optionality for them going forward.
Ira Jersey, Tottenham 4, Aston Villa 1 yesterday. What happened with your side?
Our defending was terrible. I don't want to call anyone out, but Pau Torres did not have a good game, and our center back, let up. Basically, he was the reason why Tottenham was able to score 3 of their goals. That was not a good result for us at all.
All right, but you're still 5-3-2, so you guys are still in it.
Yeah, we're still in the Champions League hunt right now. I think the big issue for us is for Aston Villa is we just don't have the deepest of squads, and our first 12, 13 guys are great, but we fall off. And given we have to play Champions League, FA Cup, as well as the Premier League, becomes pretty much a grind. And Tottenham's very good at home too, so we can't deny that either.
All right, next up for Aston Villa is Liverpool, so we got that coming up next Saturday. So we'll certainly be all over that here. So the Ira Jersey, thanks so much for joining us. Ira Jersey, Chief U.S. Interest Rate Strategist, Chief Football Strategist.
That's right.
Owner of a minor league team down there, Real Central, New Jersey. Yes, there is kind of minor league soccer. And so Ira's all into it.
Yeah, so he's not just doing only the Bloomberg intelligence thing.
No, he's got a lot of irons in the fire here. But again, as he mentioned, we got
playing or coaching?
Owning.
Well, yes. I feel like he'd be a great coach. I saw those suspenders he had with the soccer.
He's done a ton of coaching, kid stuff. So he's all into it at all levels. So he's our go-to guy there. So, but we talked to him about the interest rates. And again, the Fed meeting Wednesday and Thursday, 2 p.m. will be the release of their report, and 2:30 conference call.
That's right.
Michael McKee will be down there via the Acela train down in D.C., peppering the Fed Chairman Jay Powell with some questions about where we're going with these interest rates. Right now, the 10-year Treasury, it's off 11 basis points, 4.27%. We're going to have more Bloomberg intelligence coming up in just a moment.
events, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. A major stock average, right now we'll call it mixed. 337 stocks in the S&P 500 are higher, 160 lower. The best performing stock of the S&P 500, Mosaic, they make fertilizer, up 8%. We do a lot of that here, too. There is an election, seeing some unwind of the so-called Trump trade. Seema Shah, Chief Global Strategist at Principal Asset Management, says, however, the key focus for investors remains earnings.
At these kind of levels, where valuations across the market are pretty stretched, we absolutely need to see these companies presenting pretty strong earnings. So I think the jury's still out. So far, okay, but we still, as I said, need to see that come through.
Here's an earnings scorecard, by the way. 361 companies in the S&P 500. They've reported so far, of those, 75% have delivered positive earnings surprises. Taking a look at Marriott shares, they are down 2.4%. The hotel company cutting its adjusted earnings per share guidance for the full year. And the New York Times company, those shares are lower as subscriptions and revenue fell short of estimates. The S&P 500, 5 points higher, 5734 on the index. The Dow Jones Industrial Average, 118 points lower. That's down 0.3%.
I will show you.
The Nasdaq 100 up.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
Trying to do both, actually. Okay. I would say that most of the traders have a slight tendency towards the Trump trade that has maybe reversed a little bit overnight with the new poll that showed Harris ahead in Iowa. But there's also a lot of hedging going on. People are betting on inflation, they're betting on a steeper yield curve, and both those things should make money no matter who wins.
It's interesting because when I've been speaking to a lot of portfolio managers who are managing money for longer term, they're still kind of on the sidelines and are more focused on the Federal Reserve and kind of the direction of the economy. But when you're talking to, say, hedge funds, which obviously have a much shorter type of time frame, what is the mood like there, and how exactly are they priming their computer models for a moment like this and how they're trading? Because obviously they have a different time horizon than, let's say, somebody who's managing money like 5-10 years out.
Right. So we spoke to one of those managers who has a pretty substantial quant aspect to their portfolio. And they did, over the past few months, and because it's only been a few months since Harris came into the election, they've been looking at polls and betting markets and trying to put that into their models and isolate how asset classes move with a rise or a fall in the polls. So people have been rejigging their models to try and get a better idea of what to do.
Global Wall Street, I mean, they're getting ready for this thing. JP Morgan Chase, you report, plans to increase staffing in Europe and Asia to handle overnight volume and volatility. Goldman Sachs expects to have hundreds from its sales and trading teams on site in New York well into the night. So Global Wall Street, they're gearing up for this. It's not just going to wake up and see what happened.
Yeah, absolutely. And we have even smaller brokers who have never had people overnight before for an election saying that this election they might well have to have someone there throughout the night.
Something else I was keeping a close eye on is when you're looking at the CFTC data. We get updates every Friday at 3:30, so always convenient right before the closing bell at the end of the week. But hedge funds were, of course, betting on bigger price swings coming up. Probably not surprisingly, so when you're looking at large speculators turning that long on VIX futures for the first time since January of 2019. So whenever you're speaking with your sources, specifically when you're thinking about the options equity side of things, what are they telling you with as more specifically of how they're trying to hedge or what they're trying to either buy or kind of shy away from at this point?
Yeah, there's definitely been more VIX buying because they do expect that there's going to be more volatility, and also more futures as well.
Something I was wondering too, because you have such a jam-packed week and then other events coming up in the coming weeks too, obviously the election, the Federal Reserve, we have a 13F filing deadline coming up too. We still have about 9% of the S&P 500 by market cap reporting, and then of course we have NVIDIA actually coming up on November 20th. So when you're speaking with them, do they say there's a specific event? Obviously we know the election's tomorrow, but is it harder to decipher one event versus another?
Yes, absolutely. I mean, the Fed is really a huge thing, and I think more people are looking at what's going to happen there than anything else, even the election.
Right.
So the popular Trump trade, again, long the dollar, short bonds, is that unwinding today a little bit because of this new polling data that came out? Does it move that short term?
Yes, it has. The last time I looked, the dollar was down almost 1%, for example. I think crypto is down too.
Yep. Yeah, we got crypto, Bitcoin down 1%. The Bloomberg Dollar Index down about 0.6%. And the people buying the 10-year Treasury up 24-30 seconds. So it just day to day, it seems like.
Yeah, absolutely. And what will be really, as we start getting results, it's going to be even more frequent.
Right. Talk to us about the implied price swings that the options market's pricing in the days after the election.
Meaning what exactly?
Kind of like the elevate. So Citi, for instance, Stu Kaiser at Citi, he sees on actually a Wednesday, so the day after the election, the S&P 500 could swing about 1.8% in either direction. But obviously we know we'll have the Fed decision on Thursday too. But do you expect to see heightened kind of volatility, particularly in the VIX and then in options and futures markets, especially, in the coming days and then the coming weeks too?
Oh, yes. Particularly in the dollar, people have told us that that's something they're really, really going to be watching because they feel like that's going to be something that everyone will be looking on, even people outside the U.S., because of the trade issues and such.
I mean, that makes sense.
Yeah, but there's also a chance that we're not going to know for some time if, this thing could drag on for days. There could be legal challenges. So are fund managers, are they kind of positioning themselves for that? Or is that just a matter of hedging, I guess?
Yes, I think that's mostly hedging. Although some people, I think Goldman Sachs had a note out that said that even if we don't have a precise decision, that there will be certain things that will lead the market towards a conclusion of Trump or Harris.
How about just in terms of going forward? I mean, a lot of folks say, don't worry about who wins the White House because it's going to have a gridlocked Congress.
Right, the makeup of Congress,
yeah,
right?
Exactly.
Traders will usually focus on that. That's interesting too.
Are traders looking at that as well?
Absolutely. We definitely had people say it does not really matter as much who is president, at least in the short term, as whether we have a sweep in Congress or not.
And specifically when you think about policy proposals, whether they affect obviously trade, if you think about big tech regulation, healthcare regulation, are there particular types of policy proposals that those traders are looking at that they want to remain gridlock in Congress so that obviously the status quo would stay in place and there wouldn't be big changes to different policies for those types of industries?
Yeah, definitely. I mean, I think crypto is one. I think clean energy is another one that a lot of people are looking at.
All right, Catherine, thank you so much for joining us. Catherine Burton, she's a senior reporter for Bloomberg News, joining us here in our Bloomberg Interactive Brokers studio. The big take story out on the Bloomberg terminal. You can read it on the terminal.
Great stuff.
Yeah, it's always great stuff. We love having talk about these stories. So you can read it on the Bloomberg terminal. You can also go to bloomberg.com/big take, and it's interesting to see how the markets are reacting to just seemingly daily swings and kind of how the polls are moving here when you take a look at some broadly traded asset classes like currencies, like bonds.
Yeah, looking at the VIX above 22 again. I mentioned this earlier, but if you're looking at the VIX, actually, the last time the S&P 500 was trading near an all-time high while the VIX was over 20 was actually back when the fear gouge was breaking the Delta the variant from COVID. That was back in March of 2021. So you rarely see the S&P at records and the VIX above 20.
That sounds like an article maybe you reported on.
Potentially.
Potentially, okay. It's been known to happen. All right, coming up, Matt Palazzola. He's a Bloomberg Intelligence analyst covering the insurance business. Berkshire Hathaway reported earnings over the weekend. Why? Because Warren Buffett can do pretty much anything he wants to. So they got a lot of cash. We'll break it down coming up. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Berkshire Hathaway, Warren Buffett, they release earnings
See
on
what
Saturday.
happens when you try to talk with goldfish in your mouth?
I am a sucker for the goldfish upstairs.
My
I have
first
to
break's
say.
at 6:40 a.m. So
I love the goldfish. I'll probably end up getting a whole batch after we're done here.
Exactly. All right, so Warren Buffett and Berkshire Hathaway reporting some earnings over the weekend. The question I always have is how much cash do they have on their balance sheet?
Everybody always wants to watch that as a contrarian potential indicator for the stock.
I just don't know what's going on over there. But our next guest does. Matt Palazzola, he's a senior analyst covering the insurance business for Bloomberg Intelligence, joining us here in our Bloomberg Interactive Broker Studio. Matt, what'd you take away from the Berkshire's results on Saturday?
So, Paul, to answer your first question, $325 billion in cash. That's the most they've ever had. So when you look at their earnings, there's a couple of layers you have to unpeel first. Their GAAP earnings were swayed by investment changes. even Buffett himself has said you kind of just throw that out. We don't really look at that. It was like 26, I think, billion versus an 11 billion loss in the year ago. Those numbers are a little bit irrelevant. The next part is their earnings from operating companies. Those, if you look at just the number they give you, those were down about 6%. What happened there, though, was they have a lot of yen debt, and there was a big Forex loss in there. So peel that back, the operating company's earnings were up a little bit, which was less than I expected. The insurance operation had a couple of unforeseen negatives in it, and that really turned it down. Some of them I don't think are ongoing things, but that was really the negative variance was in the insurance business.
Something, because we were actually chatting about this earlier when it came to the percent of their cash pile at Berkshire Hathaway. So the last time it was around this high, the stock market still continued to move on to records over the following 52 weeks. But then the last time on this opposite end of that, the lowest percent of cash he had at any time over the past decade was right when the S&P 500 briefly peaked in 2021. So what's your thoughts whenever you're kind of thinking about what this could mean more broadly for where like major indexes and equities could potentially be headed?
Yeah. So, I mean, Buffett is a more of a time in than timing of the market, right? Clearly. So, I don't think he's making big moves on large expectations on the market. If you look what happened, they sold about $22 billion worth of Apple stock in the quarter. That's along with about $9.5 billion worth of Bank of America stock in the quarter. I don't think you look at that and say, okay, he's completely bearish on everything on the market. I think those were, unique things. They were highly concentrated in Apple. Their Apple position is down 70% from its high in terms of the shares they own. So I think those things were unique to the stocks they own. Buffett has repeatedly talked about taxes going up. I don't think it's even an election cycle now, but he's just saying even longer term, there's probably only one direction taxes are going for us, and that's up. So you'd not be surprised to see them taking large gains off the board.
So $325 billion, is there any realistic scenario for deploying that capital over a multi-year period?
It's tough. They are limited in how much shares they can buy back just on the float. We had wrote, it's tough to see them doing a tens of billion-dollar acquisition. There is the ownership in Chubb out there, which is, perhaps the mega deal that may or may not ever happen. If they do something, they bought Allegheny, which was an insurance company, kind of conglomerate a couple of years ago. That was about $12 billion. It seems like that's going to be the max on what they're going to do. But if I could predict what Buffett would do, I'd be on an island somewhere.
But no dividend.
There will not be a dividend as long as Warren Buffett is sitting in Omaha.
Why is that?
I mean, I think he likes getting them. He doesn't like paying them. He says, look, and I would agree with him, I'm better off holding this money than giving it. Your return on a dividend is going to be less than my return investing it. That probably hasn't been true actually recently, but I think that's his mindset.
You were mentioning about how claims they wrote years ago are costing them more than expected. Walk us through that dynamic.
Sure. So this is called reserve development. So what happens is insurance companies, like, so for example, Geico, they write auto, some home, well, not really home, but write auto. You're either going to have a car accident in a year or you're not. But they'll write some liability business where you may have a claim and that you might find out about that claim years into the future. And what is happening is you set up a reserve for that, and that reserve could be wrong, or they're almost always wrong, right? But it could be wrong too low or wrong too high. And what had happened in the quarter was their reserve for their primary insurance business, a specific unit of it, was quite wrong. And there's new management took over that unit, and usually when that happens, they add to their reserves. If this was just a XYZ insurance company, this would be really bad. But it's Berkshire. Their financial strength is so superior to anything you might see that it's kind of just a blip.
I got a Vespa scooter. Progressive wrote the policy on my Vespa scooter.
What were they thinking?
Wow, I wasn't ready for that.
Always wear
one.
a helmet. That's all I can say.
I do have the helmet. Progressive, give me 30 seconds on Progressive, because so far I'm happy with it.
Yeah, I mean, so Berkshire themselves has kind of been saying Progressive's ate our lunch for the past decade. Progressive, extremely innovative in pricing. which allowed them to kind of take a lot of market share. State Farm is kind of the big name there in auto insurance, and Allstate's just been picking away. I mean, not Allstate, Progressive has been picking away at them. The recent spike in auto insurance prices, they navigated that a lot better than the rest of the industry, which is allowing them to pull more share. Geico is shrinking, Progressive's growing. Really, best operator in the auto insurance space, Progressive.
And actually,
good choice.
My existing insurer, which I've got like 5,000 lines with, their pricing was twice where Progressive was. So I'm just like, see ya.
They don't know how good of a risk you are.
Exactly right. Me, the Vespa scooters, cruising the Jersey Shore, John Tucker. That's a view. This is Bloomberg.
Have you seen
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, we're going to get the latest on these markets. Abigail Doolittle will join us here in studio. She is our takes care of all of our markets analysis there. Mike Shepard, Bloomberg senior editor in Washington, D.C., will give us the latest on this election, changing polls seemingly by the hour. And then Gina Martin Adams, she's going to join us in studio. She is the chief U.S. strategist, equity strategist for Bloomberg Intelligence. Where do we go with these markets here as we approach Election Day? So a lot coming up in this hour. But right now, let's kick things off with Mr. John Tucker.
And right now, Paul, we are seeing the major averages. They are mixed. This report is being brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor-to-staff ratio. Small firm attentiveness, big advisor impact. Go to commonwealth.com to learn about our consultative support and technology. Right now, the Dow Jones Industrial Average 143 points lower. S&P 500 up 4, and the NASDAQ 100 right now 37 points higher. Energy, the best performing major industry groups on the S&P 500 as we see the price of crude oil jumping today. And the parade of earnings continues. Marriott International, those shares, they are falling right now. 2.1% are reporting weaker profit for the latest quarter than analysts expected. Fox is climbing. The media giant reporting stronger profit for the latest quarter. And that was despite increases in some of their costs. And as we look at the VIX, the Wall Street fear gauge, that is above 22. And as we wait for election results after tomorrow, Ed Yardeni at Yardeni Research sees a bumpy road to nowhere for markets.
The polls are suggesting that we could have a contested election, and those can be pretty nasty and last a while. So I wouldn't dismiss the possibility for that, and I think that could create uncertainty, certainly, about what fiscal policy is going to be up in next year.
We're seeing some of the so-called Trump trade unwinding to a degree. The U.S. dollar down 0.5%, and Treasury yields are lower. The 10-year yield, 9 basis points lower. That's at 4.29. The 2-year is down 5 basis points at 4.15. And, of course, Thursday, monetary policy in focus as we get the latest results from the Federal Reserve. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Jess and Paul.
All right, John Tucker, thank you so much. We appreciate that as always. Jess Menton sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, and we're streaming live on YouTube as well. As John was just reporting, kind of a mixed market out there in terms of the equity indexes. Let's see where the action is under the hood. We can do that with Abigail Doolittle, Bloomberg News Chief Markets Correspondent. Abigail, what are you looking at this morning?
So one stock that's really catching my eye right now is Viking Therapeutics. Earlier it had been higher, and now it has flipped lower to the upside. This, of course, was on an early stage study around their weight loss drug, which is a pill as opposed to a shot. Now, on that, initially it had been up more than 5%. Now the stock is down 7.7%. the study showed that the participants lost about 6.8% weight of their weight over 28 days, which seems like quite a bit in a short period of time. The flip to the downside, it could just have to do with too far, too fast. The stock, even being down 7 to 8% today, it is still up more than 250% on the year. So it was good news, yes, but some may be taking profits.
When it comes to the technicals, because I know you watch that very closely, so the S&P 500 trading around 57.34, kind of rounding there, but then the 50-day moving average, which I know you were pointing out yesterday, it's around 57.04 right now. What do you think when it comes to levels for resistance and support? Are you watching more kind of broadly for the index? And what do you think are some other key thresholds to keep an eye on?
So the biggest thing that stands out to me about the S&P 500's technicals right now is the gap down that was made last week. That's a breakaway gap. That was not a gap of acknowledging the weakness. It was a gap of surprise. Folks were surprised by Meta, Microsoft, and that tech weakness. So often when you have a breakaway gap along those lines, similar to what we had back in July, and then there were a couple more, it tends to mean that there's going to be more surprises. There could be more selling. So to answer your question in terms of support, I think that the next good level of support is probably closer to that 100-day moving average, right below 5,600. 5,500. That's really where good support is as well. And the last two times the S&P 500, in fact, the last three times the S&P 500 has gone through the 50-day moving average, which it has not quite done yet. It has in fact gone down to the 100-day moving average or below. Relative to resistance, it would be really, it would be to see whether or not it can fill that gap, actually. If it can fill that gap, it's unclear as opposed to whether that means a move would be higher. The real level of resistance is just the last high.
Earnings, we still got a bunch of earnings this week. What are you
Pretty
looking
amazing.
forward to?
I
know a lot of my media companies are reporting like the,
Right.
the
There's like about 9%
Paramounts.
of the market cap for the S&P 500 still reporting
I
this
don't know, I'm
week.
just,
It's interesting in terms of earnings this week. For me, at least, it's taking a little bit of a backseat relative to the election.
To all the other events that are coming up.
There's this energy beneath the surface, everybody wanting to know what's going to happen. And what's interesting is the S&P 500 right now just churning on above average volume, but very small moves, telling you that folks are pretty nervous. So more than individual stocks around earnings, that VIX, it's higher. It's at a 22, telling you that investors think that there's going to be more volatility ahead. The peso is gaining against the dollar, which is a nod against the former president, Donald Trump. And then, of course, DJT all over the map. So I think everybody's waiting to see how that goes. The big earnings report that I am waiting for, it's not this week, it's November 20th, is, of course, NVIDIA, which was added to the Dow today.
Oh, that's it. Yep, exactly right. So, all right, we got some big earnings coming up this week. We got the Fed, we got the election, plenty for investors to sink their teeth into. Abigail Doolittle, thank you so much for that. Chief Market Strategist for Bloomberg News, joining us here in our Bloomberg Interactive Broker Studio. Let's get the latest here from the campaign trail as we kind of head into Election Day tomorrow. Again, there's red and green on the screen here. Michael Shepard joins us, Senior Editor, Bloomberg News. He joins us from Washington, D.C. via Zoom. Michael, what are you hearing from both candidates today on kind of their last full day of campaigning?
Paul, we're looking for them to really try to close the case in their bid for the White House, and they're going to be on the trail quite a bit. Donald Trump will be doing 4 rallies in 3 states, starting with North Carolina and then heading to Pennsylvania for 2 appearances, and then closing up in Michigan. He'll be in Grand Rapids, and that's where he has delivered his final remarks in his last 2 bids for the presidency. And what we've seen in these appearances from Trump in recent days is an airing of a lot of familiar grievances, including that his unsubstantiated claim that he did not lose the 2020 election to Joe Biden, and even saying yesterday that maybe he shouldn't have left the White House. And he's been setting the stage potentially for a challenge to the election results by suggesting repeatedly, again, without offering any evidence, that there is widespread voter fraud, including in the state of Pennsylvania. Now, Pennsylvania is a critical state. Of course, it is seen as really the keystone, so to speak, for the industrial northern states that Democrats see as critical to winning. They call it the blue wall, and Kamala Harris will be in Pennsylvania all day and into the night today. She has 4 appearances there, starting in Scranton and then to Allentown. These are 2 locations where there are also closely fought House races. And then she'll be doing big events in Pittsburgh and in Philadelphia, featuring some pretty well-known talent, including Katy Perry, who is going to be entertaining folks in Pittsburgh, and then closing out in Philadelphia with Lady Gaga giving a concert there. And interestingly, hearing her argument over the last day, she is now backing away from naming Trump in her remarks and now focusing solely on her agenda and her vision going forward.
So for Trump, as you know, to win the election, he would need to flip those 3 key blue wall states that you were just mentioning. So obviously, when we're thinking about Michigan, Wisconsin, as well as Pennsylvania, is Trump polling better in these Sun Belt states than when you're thinking about just how close it is when it comes to those blue wall states?
He has been performing better, especially in places like Arizona, where immigration has been a prominent issue. And even in Georgia, he seems to be doing a little bit better there. But honestly, the polls have all been so close in the swing states and even nationally. Some of them show an edge for Harris, but many of them really show it so close to call. It'll be really difficult to tell. And while we're looking at the polls, we have to keep in mind that there are people who are either not answering the questions when pollsters reach out to them, or the pollsters themselves may be sampling for a different problem set, namely the 2016 and 2020 elections, and altering and weighing the results in a different way this time around that maybe doesn't work as well in 2024. So we have to take everything with a grain of salt and look at what turnout is looking like in key demographics. For Democrats, it'll be Black voters and women. And for Republican voters, Donald Trump is looking for a strong showing of men coming out to the polls. He has made this pitch to male voters, trying to get them out to the polls, and following on his agenda of being tough on crime and immigration, and trying to rekindle some of what they may have felt when he was back in office between 2017 and 2021 about the economy.
All right, Michael, thank you so much for joining us. Michael Shepard, Senior Editor, Bloomberg News, joining us from Washington, D.C. via Zoom. And, of course, you can join us for complete coverage of U.S. election results Tuesday night. It kicks off at 5 p.m. Wall Street time with a special 2-hour edition of Balance of Power, followed by coast-to-coast team coverage from Bloomberg at 7 p.m. Get live election results and analysis with context Tuesday night on Bloomberg Radio, television, and the Bloomberg Podcast YouTube channel. Looking at these markets, as John Tucker's been reporting, kind of a mix, no real direction here. We got the S&P up slightly, the Dow off about 0.3% here. Looks like that Trump trade kind of unwinding a little bit on the margin here on the back of some polling that shows perhaps Vice President Harris doing a little bit better over the weekend in the state of Iowa. So we keep an eye on that. Gina Martin-Adams joins us here. She covers all these equity markets for Bloomberg Intelligence. Gina, what are the conversations you're having with your clients these days about the markets and the political backdrop of kind of what we're dealing with this week?
Yeah. So most of the conversations we have are what if conversations, sort of if this, then what. So we've done a ton of scenario analysis on, various combinations of potential outcomes from Washington and what it may mean for the international financial markets. That said, I think that there are some overwhelming trends also that people are generally kind of ignoring as they're sort of hamstrung around the election and really concerned around the election. There's a lot has happened in the last 3 months, and that really is what's driving financial market performance for the most part. So we kind of do a little bit of reset on, well, regardless of who wins, what you tend to see, right? What you tend to see, regardless of who wins, is stocks tend to rise very quickly in November and December. 65% of the time they rise. In election years, they rise a little less than they do in non-election years on average, but that's mostly because of the years of 2000 and 2008. When you exclude those years, you actually find election years are pretty great times for stocks typically. You also do tend to see a little bit of a hangover from the election in the early part of November, so that's something to anticipate. Earnings season is playing out exactly as you would anticipate. Valuations got in the way of tech stocks that are still beating analyst expectations, but maybe not market expectations.
What was really interesting to us about October as well was the degree to which the international markets, so the non-domestic equity markets, underperformed. That was very unusual. It's very rare to see U.S. equities outperform non-U.S. equities in advance of an election year. So that could set us up for an interesting reversal after the election, particularly considering fundamental conditions. So that was just a broad data dump.
Well, I'm glad you
some
brought
of the
that
conversations
up.
that we
We've had those conversations, I can tell.
Because I know there's the presidential cycle that a lot of traders will follow really closely. And to your point, typically you would see the last 2 months of the year rally. But when you had the best first 3 quarters to year since 1997 for the S&P 500, it's a little tricky to know if we still follow that same playbook. So what I'm curious about is what corners of the market do you feel like have the best potential to have a relief rally?
Yeah, I think that that's where we kind of lean on that analysis of October being so anomalous, that the non-domestic markets perform so poorly and suspiciously poorly. In particular, if we do end up with a Harris win and the dollar does decline on account of that Harris win, which does seem to be the consensus view as a likely outcome, then international stocks should rally quite well. Usually what you see is the dollar rises also, though, just in an anticipation of strain. So the dollar, I do think, had been through a period of time, a very brief period of time, but nonetheless a period of time in which it was rallying just because nerves are high. And the release of those nerves, just because we do finally have the election over with, could result in a dollar reversal, which helps those international equities. At the same time, these are the areas of the market that are still producing some earnings momentum. Whereas U.S. earnings momentum logically probably already peaked in aggregate, we're seeing earnings momentum improve outside of the U.S. We're also seeing earnings momentum improve for small caps inside of the U.S. So the way that I think we're setting up for 2025, regardless of who is elected, is the laggards of this recovery cycle probably still have room to play some catch up to the early leaders of the recovery cycle. And what that means in broad terms is U.S. stocks may take a little bit of a backseat to non-U.S. stocks. Large caps may take a little bit of a backseat to small caps, particularly toward the end of this year, if we can get a little relief rally going.
All right, so we've got earnings, we've got elections.
13 filing deadlines coming up.
We have a Fed on Thursday.
No rest for the week.
How does that fit into kind of what you're thinking?
Yeah, so I think that the Fed is a really big part of the story as well, and they're a part of the story because of the currency more than anything. I think that we have probably overemphasized the potential impact of higher interest rates, and we did a lot of work on zombies last week and coinciding with the Halloween holiday. But what we have actually seen is even though interest rates have risen materially, and corporate yields in particular have risen along with the overall Fed funds rate, we've seen the number of zombies in the S&P 500 actually shrink over the course of the last year. By zombies, we're saying the companies that are paying more in net interest expense than they're earning in income.
That's not good.
So they're true zombies. Like Boeing right now qualifies as a zombie, right? They're paying too much interest expense relative to their operating income. And what we found is even though we do have those stories that have evolved in the marketplace of zombies, the number of zombies out there is actually smaller. Altman Z-scores in the small cap index are anomalously strong relative to where you would anticipate because of higher interest rates. So I think that the market has been very squarely focused on, what does the higher interest rates do to corporate borrowing conditions? And kind of the reality has been this has not been a constraint. So we'll maybe get a positive slight uplift, but more importantly, what does it mean for currency? And I think that that's the big key out of this is, will this result, because the Fed is reducing rates and reducing them relatively quickly, will we get some relief in terms of dollar weakness that helps improve international profits? That's a real possibility, and I think probably the thing that the market is least prepared for.
Very good. As always, Gina Martin-Adams, thank you so much for joining us. Gina Martin-Adams, Chief Equity Strategist for Bloomberg Intelligence, joining us here in our Bloomberg Interactive Broker Studio on the same day that Bloomberg Intelligence Management also showing up in the office. So a rare sighting.
There you go.
There. How about
GMA,
that?
that's what we like to call her.
She's always here. She never mails it in. All right, we're going to have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom. This Bloomberg Business Flash. Major stock averages, they are mixed right now. The leader in the S&P 500 in terms of index points, that belongs to NVIDIA. Those shares up 2.3%, as we learned, is going to be incorporated into the Dow Jones Industrial Average, replacing, in fact, Intel. Berkshire Hathaway, the number one laggard in the S&P 500, that is down 2.4%. Energy, best performing major industry group in the S&P 500 as the price of crude oil, that jumps. 361 companies in the S&P 500, they have delivered their earnings so far this season, and earnings are on track to beat expectations. Election day will quickly be followed on Thursday by the Fed decision and Jerome Powell's press conference. Right now, the S&P 500 2 points higher, 5730 on the index. Dow Jones Industrial Average 172 points lower, and that's down 0.4%. The NASDAQ 100 right now is higher, up 36 points. That is a rise of 0.2%. A 10-year yield right now 8 basis points lower. We're down to 4.30. The 2-year yield is about 5 basis points lower, and that is at 4.15. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and it's your Bloomberg Business Flash. Jess and Paul.
All right, John Tucker, thank you so much. We appreciate that. Jessica Menton, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. Alex Steele will be back in a couple of weeks. That'll be a good and wonderful thing. We're here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. All right, I'm going back to that big take story. The Trump trades, which is long the dollar, short the bonds, seems to be unwinding a little bit here. I wonder if you manage a gajillion dollars like the good folks at TCW do you even care about that stuff? Or you're looking through to the bigger picture? I don't know how they do that stuff there. Ruben Havanisian, he is a generalist portfolio manager at TCW's fixed income group. Ruben, what are you and the smart UCLA grads, which seems to be you guys own TCW, the UCLA school out there. What do you guys, when you sit around in your Monday morning meeting, what do you say about the political backdrop here? Is it factor into what you guys do, or do you just kind of plow through and focus on the building blocks?
Good morning. Thanks for having me. I'll be back on the show. We are not playing the political noise. We're looking through the noise, and we're positioning based on our convictions, based on the value that we see in rates, in duration, and certain parts of rates. And from that perspective, the trade that we saw materialized in the last month or so since late September, where we've seen rates higher by 50, 60 basis points across the board, we saw it as an opportunity to add to our duration exposure in the front end of the curve and do some other stuff, add to some sectors that are that got sold off and got hurt by the duration, by rates selling off. We think that the sell-off in rates, as you can see this morning, we see a partial reversal of the sell-off that we saw since late September. And I think it's a healthy reminder that we haven't heard, if you think about it, we haven't heard a lot of new information. We knew it was a very close election. As of this morning, we know exactly the same, that it's a very close election. So we're kind of splitting hair here. And we think the markets got ahead of themselves in pricing in a very extreme scenario and very high probability of Republican sweep. So we saw it as an opportunity to express some of our trades, some of our trades that are based on the value that we see in rates.
Heading into some of these big key events this week, what do you think speculative positioning in the bond market is telling us?
Well, we think the speculative positioning in the bond market, and of course it's hard to decipher how much of this sell-off, we think the sell-off that we've seen in the last 4 or 5 weeks is driven by some better than expected data that we saw, especially in the first half of October, which we would recommend to take with a grain of salt. And then some of it was this Republican momentum. And it's telling you that investors are pricing in a very high, again, we saw a partial reversal of that this morning, but generally speaking, we think the data tells you that investors are pricing in very high probability of a Republican sweep, and add that a very high probability of some extreme agenda being enacted and implemented conditional on that Republican sweep, which we think is certainly a scenario, but we think that the weight assigned to that scenario is much higher than is justified again, what we're seeing this morning is probably a healthy reminder of that.
I'm looking at the INGO function on the Bloomberg terminal, and I see the best performing fixed income category is there being U.S. Corporate high yield at almost 7.5% there. What's your call on the high yield market? I thought we were concerned about recessions.
So we think that we are in a hard landing camp. We remain in hard landing camp, but we have seen spreads compressed in credit in general. We have seen spreads compressed across the board, both in investment grade and below and high yield. In fact, if you look at the spreads against their history, they are currently comfortably in the top 5th percentile. Generally speaking, if you look at investment grade credit spreads, they are in the top 1st percentile, meaning spreads have been wider than where they are now 99% of the times. The stats are a little better for high yield, but similar. So we think the market is very optimistic about the economic scenarios and outcomes, and is not compensating investors sufficiently for the potential volatility associated with the worse economic outcomes than the market is currently pricing in.
When you're going into a pivotal week with a barrage of different events here, what is some of the questions that your clients are asking you?
Well, it's what you would expect. It's the questions that your guests are asking you, or you're asking your guests. It's what will be the outcome of the election, and what that really means for the economy, and what that really means for the markets. And we think that there is currently a lot of extrapolation. There's a lot of uncertainty, and that's probably an understatement. And there's some fear, and there is also some extrapolation from 2016 experience in terms of rates and what the election will mean for rates. And we do think that those parallels that are being drawn by some investors, at least, are probably not justified, because we're sitting at a very different environment. We're sitting in a different regime in 2016. In late 2016, as you remember, the Fed had just embarked upon interest rate hiking path. We had just come out of the 2015-16 mini crisis in energy and commodities. This time around, we think we're late cycle. The Fed has started its interest rate cutting cycle. So it's a very different environment, and there should be a lot of caution in extrapolating from 2016 experience.
All right, Ruben, thanks so much for your time. I always appreciate getting a few minutes of your time to talk about these bond markets. Ruben Havanasian, generalist portfolio manager at TCW's Fixed Income Group. They're based out there in Los Angeles, California. Let's get the latest from the campaign trail. Maybe some of the economic implications of either scenario in terms of the White House as well as Congress. Enda Curran joins us, Bloomberg global economy reporter. And as I think about these campaigns and economic policies, I'm not sure I'm getting home a lot of clarity out of either candidate. What are you seeing?
Well, pretty stark economic policies on offer. Whichever side wins will dictate how people pay their taxes, how the country trades. It will dictate the volume of workers allowed into the country. For example, immigration has been such a hot topic over the past few years. So I think that there are fairly clear differences between both sides. And in particular, I would say, on as I just mentioned, on taxation there, former President Trump, lower corporate taxes, Vice President Harris, higher corporate taxes, immigration, former President Trump, big deportation, Vice President Harris. She's strict in her own way, but ultimately nowhere near as draconian as the measures Trump is suggesting. And then, of course, on trade, former President Trump talking big stuff on tariffs on goods that come into the country. Vice President Harris says they would be a tax on consumers. So I think, to be sure, take your point that there's always vagueness in campaigns, but there are certainly clear differences between both campaigns.
As we've seen during the last particular trade war with China, the executive branch doesn't necessarily need Congress's approval to pass through certain tariffs here. What particular threats to the economy, and in particular when we're talking about inflation, do you think different tariffs could mean to the fiscal side of things?
Well, so there's no doubt the tariff story is mostly focused on the Trump campaign. He's talking there about a universal tariff of 10% on all goods coming from no matter where they are in the world. And then, of course, up to 60% or higher on Chinese goods. Now, that's when you get into a big academic debate over how inflationary would they be. Broadly speaking, economists say they would certainly be inflationary in terms of first round effect, because if you're buying stuff that has a high tariff on it, you're going to pass that cost on to the people on Main Street. So there's at least a first round inflationary impact.